Bloomberg NEF expert Meredith Annex and dig into their models about how hydrogen fits into the future energy mix. This is Bloomberg Green. From Bloomberg's World Headquarters in New York, I'm Kaylee Lyons, and this is Bloomberg Green. Now let's bring in Meredith Annex, our Bloomberg NEF hydrogen specialist, to talk more about how hydrogen could change the energy landscape. So Meredith, what place do you think hydrogen is likely to have in the future energy mix globally?
Hydrogen's this incredible solution for us as we look to decarbonize because it's a perfect solution in areas that are hard to electrify. So where we like to think about hydrogen playing a role, it's in things like heavy industry, especially where you need a feedstock as well as energy source, and in things like dispatchable power, long-haul transport, maybe even shipping and aviation.
That sounds great that it can be used for such diverse industries. At the end of the day, though, how much is this going to cost?
Well, that's the amazing thing about hydrogen, because depending on how you make it, it can actually see significant cost declines in the future. So when we're talking about clean hydrogen, we usually mean green hydrogen produced from renewable electricity. And in that case, your hydrogen is almost as cheap as the renewables that are used to make it. So if you're in a place with really good renewable resources, you'll be able to have cheaper hydrogen. But even in places with less good resources, we think that hydrogen can be cheaper than $1 per kilogram, which is the price of unabated hydrogen today, and around $8 per million BTUs for those who prefer to think in energy units. And that can be achieved anywhere in the world by 2050, we believe.
All right, so let's talk about kind of the pros and cons list. I don't know where cost fits into that, but what are the advantages to hydrogen over other renewables, and then what are the drawbacks?
Yeah, main advantage is the fact that hydrogen can serve roles that electrons struggle with. And that's things like seasonal storage, for instance, or just anything where you need storability, where electrons are harder to store, hydrogen is going to be easier. That also leads to a downside, though, because hydrogen is less energy dense than the usual things that we use for storable energy today, like coal or oil or natural gas. So you will need more volume of storage to handle the same amount of energy.
Let's talk about the viability as well and how it may differ in different geographies. What is your view on that?
Yeah, so for green hydrogen, again, from renewable electricity, really places with the best renewable resources, things like Latin America or the Middle East, even Southern Europe, have really, really good potential for producing hydrogen. And then when you're looking at blue hydrogen, which is produced from natural gas or coal with carbon capture and storage, We do see that becoming more expensive than green hydrogen in the future, especially as renewable electricity costs come down. But that can be a viable option in places like the US Gulf Coast or Russia, where you've got good geological storage for the carbon, as well as ample natural gas that's quite cheap.
All right, great breakdown. Thank you so much to our Meredith Annex, our Bloomberg NEF hydrogen specialist. And of course, you can get more from the Bloomberg NEF team on the terminal and online. And they've recently done a podcast called Hydrogen 101 as part of its Switched On series. So from iron ore titans pivoting to cleaner energy to talk of a hydrogen revolution, that's it from this week's edition of Bloomberg Green. We'll be back next week with a deep dive into the state of electric vehicles. And you can keep the conversation going by following us on YouTube, Instagram, and Twitter @Climate. I'm Kaylee Lyons from Bloomberg's World Headquarters in New York, and this is Bloomberg Green.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are off session lows, still red on the screen. The Dow, the S&P, NASDAQ all declining after 2 days of big gains. Right now we have got the S&P down by 18 points, a drop right now of about 0.5%. The Dow Jones Industrial Average lower now by 105 points. That is a decline of about 0.4%. And NASDAQ lower by 91, a decline of 0.8%. 10-year yield 3.77%. The 2-year yield now 4.16%. Spot gold down $13 the ounce to $17.12, a decline there of 0.8%, while West Texas Intermediate crude is up 1.7%, $88.01 a barrel on WTI. Also not helping sentiment toward risk assets were comments from Fed Bank of San Francisco President Mary Daly, who said market anticipation of rate cuts next year is misplaced as the central bank aims to keep policy tight to secure 2% inflation. She was interviewed right here on Bloomberg Radio.
Well, right now we've just got the rate up to a point where it's a little bit restrictive potentially, or just at neutral. And so I would see more policy adjustments as required to restrain the economy sufficiently. Remember, this is all about bringing demand, which is very strong, back in line with supply and bringing inflation down. So I do see more rate increases as necessary. But of course, we're consistently data dependent, and we'll continue to do that.
And again, the 10-year yielding 3.76%. Elon Musk's sudden U-turn from months spent trying to get out of his agreement to buy Twitter isn't sitting well with Tesla investors, concerned that the already spread-thin chief executive officer was going to add even more to his workload. Just part of the reason the car maker's market value has taken such a hit since Musk disclosed back in early April that he would become the social media company's biggest shareholder. Today, Tesla down 4.4%. Twitter down 0.5%. That's a Bloomberg Business Flash.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Live from the Bloomberg Interactive Brokers studio, we are streaming on YouTube. It is Wednesday, October 5th, 2022. I'm Carol Masser. Tim Stenovic, and my co-host, is on assignment. And so we've been able to capture him because he's been a busy dude. Bloomberg News West Coast correspondent Ed Ludlow. You know him well. He comes on air.
Good afternoon. Yeah.
We've roped him in, and he's going to join us for the next few hours here on Bloomberg. What an interesting market day.
Yeah, I mean, it's another story of good data, bad for the markets, bad news at least.
Yeah, but I do feel like people are like, stop using the word pivot. And we'll talk about that in just a moment. Also, I had Mary Daly, president of the San Francisco Fed. She's going to talk about rates in 2023, speaking of the pivot. And then Elon Musk, something that you focus on so much.
Is this a done deal? I don't think so. Not so fast. There's a lot to talk about.
Are you sure?
I'm sure.
All right, we're also going to, speaking of Elon, what the heck is AppX? We'll get into that. We're going to talk about OPEC plus potential production cuts. We'll talk a little bit, too, about global e-learning. We'll do that with the president and CEO of Coursera. And then I'm looking forward to the end.
Yeah.
Poker
face. Know your limitations.
Yeah.
That's a fantastic guest.
It's all about learning to quit and know when to say that you're going to quit. All right, first up, though, you are listening to Bloomberg Business Week. It is brought to you by Commonwealth. Commonwealth, of course, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. Let's get more on the markets with the Market Drivers Report. Let's set your Business Week agenda on, it is Wednesday. Abigail Doolittle, markets reporter at Bloomberg News, here with Ed and myself in our Interactive Brokers studio. It feels like, Abigail, it was pretty negative for most of the day, and yet we are well off our lows of the session here.
We are well off the lows, and it's not entirely clear what's driving it because, Ed and you were just talking about how there was some strong data today, so we are in this, good data is bad news for markets phase. The thing that I really have noticed all day, which is hard to not notice, yields pressing sharply higher, and of course that means stocks down because of the valuation concerns, but yields are still pressing higher, and stocks are down a lot less. So I think what we're looking at yesterday and Monday, there was a huge rally, the best rally for the S&P 500 going back to April of 2020, up nearly 6%, a nice rebound rally. Technically, it looks as though it has some legs to keep going. Now, the interesting thing, though, is the year-end price target for the S&P 500, I think it's 43.26 or something along those lines. It's hard to believe that the S&P will get that high, let alone by the end of the year, but even any time near because of the strength of the bear market. But there does seem like there's going to be a continuing bear market rally.
Yeah, it seems like this two-day rally stopped dead in its tracks, and we kind of mispriced peak rate at the beginning of this week, and suddenly reality check this Wednesday, hey, the Fed, the pivot's not there.
Yes, the pivot is certainly not there. The fact that the pivot can even come up at this point when you hear these Fed officials, and you see, I haven't looked today actually, but the last time I looked, WIRP was at 420 or thereabouts, whereas the median dot is like 437. So you have that huge discrepancy telling you that the Fed is very much serious. So I don't think that we're anywhere near peak rates. But I think the fact that we're well off the lows for the S&P 500 and for the other indexes, I wouldn't be surprised. Maybe we turn green at the end of the day, maybe the close. I think that, investors, they want this rally to go on. They want some green.
Hey, Abigail, you said 43.26. Is that
there's somewhere thereabouts?
Is that the consensus in terms of a target?
Yes.
Are strategists still very bullish, bearish, revising? What are they doing? Are we seeing any kind of momentum in terms of activity?
Well, it's interesting because at the beginning of the year, that average target, I believe it was closer to 4,800. And then in July, it was 4,400. Now it hasn't come down all that much. Now, HSBC today or yesterday, they cut their target by 21%. And I think that's to 3,500 or something like that. Of course, there's Mike Wilson out there with 3,000 to 3,500, which is strongly supported technically. Goldman Sachs, B of A, they're bearish. So I think that the tone is pretty negative from a lot of these strategists. But yet we have this target that is, basically 20% above where we are now, more than 20% above. Whether or not that happens, I mean, let's talk about.
My 401k would take that.
Yeah, everybody's 401k would take that. That would certainly
Just
be
saying.
But what would be the driver for that? I guess it would have to be, you know, of course, we have jobs at the end of this week, and jobs right now, it's kind of interesting. Non-farm payrolls, it's going to be another month where it's kind of just right. It's expected to come in at 260. Last month it was 315. That tells us the economy's not falling apart. Yet on the other hand, it's not so much that it's such a problem for the Fed than PPI. But what will be the driver for a massive rally? I'm not sure. Maybe a little bit of break in rates.
I think, you know, with my NASDAQ 100 hat on in the tech sector, I think it takes a brave person right now to call the bottom in equities. Like, I haven't heard it, and especially with, I think we've slowed down a bit in the surge in real yields, but they tick higher again, and you lose that confidence that the bottom is near.
Yeah, well, you know, I think it goes back to the overall economy. For some reason, we're not calling it a recession, even though per the old definition of a recession, it's a technical recession, 2 quarters of down GDP. The thing that is really worrisome, though, all these companies pre-announcing, now we're hearing about hiring freezes. This just reminds me of market periods of 2000, 2003, 2008. I know I've said it before. And there's another similarity. The Fed's not there. This is what it feels like when there's not an ultimate put buyer of stocks and other risk assets. There's not that liquidity surge. In fact, liquidity is coming out. So you really have to trade off of the fundamentals. So it's, you know, but bear market rallies, they happened even in those time periods.
I do want to ask about small caps. We talk so much about the large cap universe, but I know when we talk with our TV colleagues that Romaine loves to talk about the small cap universe, certainly the domestic exposure, so that can be good or bad, depending on the environment. Anything interesting in the trade there?
It's so funny, actually. I have not looked at the Russell 2000, just being perfectly honest, in a long time.
That's
So
fine.
my entry point for anything is going to be the technicals. You know, it just looks like a long, slow bleed down. Maybe there is a little bit of a bounce from a technical perspective. But yeah, it's interesting because it does have that higher. I mean, these are smaller companies, growthier companies, more U.S. exposure. In some ways, I guess, if the dollar story, you know, we have the dollar up again today. I think it was down over the last 2 days, and that's why stocks rally. And that dollar, along with rates, another pressure on stocks. You know, that dollar, if it continues to go higher, in theory, should help out small cap. On the other hand, they're just at risk. I will always, and I'll end on this, because I'm sure you probably interviewed Hugh Johnson back in the day, and he or even more recently, and he was my mentor. And I remember when I was working at Hugh Johnson Advisors in 2007. Oh, he's great.
I didn't know that.
I learned so much from him. And we had been working together there for about a year and a half, and he was really pulling out his hair, and it was small caps. They were weakening, and that was an early tell on 2008.
This is why we like you. I mean, so many reasons, but he was such a sweetheart. Abigail, thank you so much. Abigail Doolittle, markets reporter at Bloomberg News. Right now, off to World and National News with Nancy Lyons. She's in D.C. Hey, Nancy.
Thanks, Carol. President Biden plans to put politics aside as he visits Fort Myers, Florida today to see the damage from Hurricane Ian. While there, he will meet with Governor Ron DeSantis, who has feuded with the president over immigration and other issues. But Biden aides say it is time to coordinate assistance for those suffering following one of the worst hurricanes in the nation's history. Senators keep adding amendments to the annual defense authorization bill, with the number closing in on 1,000. Bloomberg's Amy Morris in Washington helps us break down the numbers.
The amendments cover a lot of ground. One would prohibit the president from selling or exporting F-16s to Turkey. Several others tackle food insecurity among U.S. troops. And then there are the Russian amendments, mostly bipartisan, that impose secondary sanctions on foreign entities that purchase Russian oil, allow U.S. authorities to seize oligarchs' assets, and then use the proceeds to help Ukraine. It also installs anti-money laundering safeguards to keep Russians from hiding their wealth. Lawmakers plan to vote in November. In Washington, I'm Amy Morris, Bloomberg Radio.
Yankees right fielder Aaron Judge says it's nice to finally hit home run number 62 that breaks the American League record. He knocked a slider into the first row of seats in the left field during last night's game in Texas against the Rangers.
It's a big relief. You know, I think everybody can finally sit down in their seats and watch the ball game. You know, it's been a fun ride so far.
Judge's mother and father were in the stands to see the 30-year-old outfielder make history. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much, Nancy Lyons in our 99.1 newsroom in Washington, D.C. I'm Carol Master. My co-host Tim Stenovic is on assignment. Ed Ludlow, our Bloomberg News West Coast correspondent, is here on the East Coast. And as someone who tracks all things Elon, Tesla, and all of the SpaceX launches and then some. So tell us about today.
Yeah, today was really interesting. It was the 5th official mission that SpaceX did to take NASA astronauts to the International Space Station. But hitching a ride is the first time that SpaceX carried a Russian cosmonaut. And given that everything's that's happening around the world right now, and Musk's somewhat controversial tweets this week about Russia and the war in Ukraine, it was an interesting moment. But as has been the case of late, SpaceX, the launch went off without a hitch.
Really good to know. And they also took the first Native American woman, right, to travel to space.
And she was the mission commander as well, Nicole Mann. So it's really interesting. There is a diversity story that's happening here, and the regularity of these launches is allowing for people to go to space for the first time, generally speaking, but also breaking boundaries in that sense too.
How much of what Tesla, or SpaceX, I should say, is thinking about that in terms of not only about, taking people to the space station or up into space in general, but thinking about the message by who is on these, missiles, excuse me.
From a PR and marketing standpoint, big time, and so is NASA. I think the reality is, even in the tourism sector, which is nascent in the space industry, it's still a rich man's sport. We've seen that, but at least the regularity of the flights means NASA can take a bigger pool of astronauts up, and that means a wider range of diversity gets its chance to go into space.
But this is a utility mission, right? This isn't about just tourism.
This is standard old servicing the old International Space Station. Keep it ticking up, 250 miles above the Earth. Keep it going.
All right, and so the multinational cruise arrival at the station, that's planned for Thursday. It's a 29-hour journey. It's going to begin a 6-month-long stay in Europe. So we know when you head to the station, right, you're there for a while.
You're there. They got plenty of food. They're going to have a jolly nice time.
All right, certainly something we're trying. Is there another one coming up anytime soon?
Well, the thing is, the crew that's up there have to come home, and that will happen later this week, so we watch.
Okay, good stuff to know. All right, Carol Master, along with Ed Ludlow, you are listening and watching Bloomberg Business Week. We are live on YouTube. We are also, of course, live on Bloomberg Radio, and this is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. Stocks way off session lows as the S&P 500 index trims a slide that approached 2% earlier in the day. Right now, the S&P is down by 0.3%. We've got red on the screen, though, as stocks struggle to gain further momentum after that massive two-day rally from this year's bottom. The S&P again down by 11 points, down 0.3. The Dow is down 48, a drop there of 0.2%. NASDAQ down 68, a decline there of 0.6%. The 10-year yield, 3.76%. The 2-year yield, 4.15%. Spot gold down $11 the ounce. Gold still holding above $1,700 at $1,715, down today by 0.6%. Crude, big story today. We had the OPEC Plus meeting, and West Texas Intermediate crude up 1.4% right now, 87.68 a barrel. Tyson Foods, the biggest American meat company, is following in the footsteps of Citadel and Boeing with plans to move white-collar workers out of the Chicago area. Tyson shares, they're down now by 0.9%. Recapping, red on the screen, off session lows. The S&P right now lower by 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
30 years in a day, Charlie Pellet?
Exactly, but who's counting?
I am, apparently. All right, Charlie, thank you so much. Well, so much for the recent upbeat change in the stock market sentiment. That two-day equity rallies we just talked about here in the United States with Abigail really coming to an end, although we're definitely off our lows of this session, thanks to hot economic data pouring cold water on investor thinking that the global monetary tightening cycle was close to peaking. And we did feel like pigpiling on that thinking was the president of the San Francisco Fed, Mary Daly, who stopped by Bloomberg headquarters. She caught up with our own Bloomberg News international economics and policy correspondent, Michael McKee, who joins us here in our Interactive Brokers studio. And so we are all talking pivot. And yet...
Well, we had to ask her about pivot because that's what's the main topic in the markets. It's interesting because we've seen markets get very schizophrenic about this. One week they think the Fed is going to cut back. Just last week, the Fed was not going to cut rates at all.
Right.
Now you've got a rate cut priced in starting in March. And I asked Mary Daly about that, and the graph you can see on the WIRP function, the bar chart that shows these rate cuts, and she said, not going to happen.
Well, she's one of these classic data-dependent Fed non-voting member this year.
Non-voting member this year.
But she's basically saying, look at core inflation. It's pointing the wrong way. We're accelerating July to August, and we will get September at a later date. That's her point, really, isn't it?
Yeah. Here's what she said.
I don't see that happening at all. I see us as raising to a level that we believe is restrictive enough to bring inflation down, and then holding it there until we see inflation truly get close to 2% and demonstrate that price stability is restored.
So basically, Mary Daly, president of the San Francisco Fed. So basically, stop it, right, everybody?
Yeah. Knock it off.
You've actually been warning us. Every time we've said it, you're like, no, there's no pivot.
Yeah, there's no pivot. And I asked her, if we debate constantly 50, 75, 50, 75 for what they're going to do at the next meeting, and I asked her about that, and she said it's not how much we do at each meeting. It's where we get to, and then how long it stays there. She wants the terminal Fed funds rate, she thinks is going to be somewhere between 4.5% and 5%, and that they're going to try to get to 4% by the end of this year, and then they leave it there until they see significant progress. If inflation should collapse, then maybe we do get a pivot.
She talked about being nimble, I think I'm right in saying.
Yeah, nimble but resolute was the word. And she said, people, I go out to Boise, Idaho, and people don't know what I mean by that. And she said, we are focused on bringing inflation down. That is what we're going to do. But how we do it, we can be nimble and we can react. If there's some issue in the economy, we don't have to raise rates as fast, or we don't have to raise rates that month, or whatever. It's just going to be a question of keeping an eye on the economy, but also keeping your eye on the main goal, which is bringing down inflation.
So we know you had to ask about the pivot because of the rally that we've seen, certainly in the equity markets. But what was top of mind for you, Mike, who follows this day in and day out?
Well, I think that was the biggest idea that she communicated. The idea that no, we're not watching the markets for signals for what we're going to do. We're watching inflation. She said basically what the Fed wants to see, and this is something to keep in mind for Friday, is the economy moderating. That we see job gains start to slow down, and we see inflation, particularly core inflation, start to slow down. It doesn't go away immediately, but you see a process underway, and then they'll know they're doing the right thing, and then they can sort of stop where they are and leave it where they are until they see there's enough restraint on the economy to get this inflation problem out of the way.
So today's economic data, how does that play into the thought?
It kind of goes against the idea that she was talking about, the ISM services numbers today. But she did point out the JOLTS numbers yesterday. She said she's been talking to corporations all over the West. She has a big district, and they've been saying that they are cutting back on their hiring. And in many cases, and Ed, you know this better than anybody, the tech companies are just, they're not going to hire anymore this year. They're done. And some of them are actually talking about some layoffs. She said what happens is the companies go to these online firms with post resumes and job openings, and they sign a 3-month contract. And they don't say, all right, call the firm up and cancel the contract a month early. They just let it run out, which is why job postings have remained high. And she said she thinks, they've been telling her for months that this is going to happen. She thinks that's what we saw in yesterday's data, that the companies are seriously starting to slow down on their hiring. And concomitantly, she said, don't look at jobless claims, because that's the last thing that's going to happen in this economy. There's still so many openings that nobody's talking about layoffs. They're just talking about not hiring.
You've been very kind over the years to take me to meet Mary Daly, and she's one of these sort of Fed in action type figures. She goes out into the real world, and she seems to be saying here, we recognize the pain of everyday Americans, but they also need to know that the Fed is, as you said, resolute in fighting inflation, not necessarily listening to their pain in how they decide to take action.
She talks about going to a Walmart in the San Francisco Bay Area, just dressed in a sweatshirt and jeans. She told them she was an economist, but she didn't tell them who she was. And she walked around interviewing customers. And they all said they're much more worried about inflation than they are about jobs.
More worried about inflation rather than jobs. All right, great reporting as always and a great interview. Bloomberg News international economics and policy correspondent Michael McKee on Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, indeed, everybody. Bloomberg Business Week on this Wednesday. Carol Master along with Ed Ludlow. He is in for Tim Stenovic. Coming up, we're going to get to the Bloomberg Big Take. We're taking a look at the impact of President Xi in the last 10 years.
10 years of change, big change.
Exactly, and maybe not what everybody thought when he first took office. In the meantime, let's get a check on the trading day and also some headlines involving Elon Musk and that Twitter suit.
Indeed. Let us begin right there, Carol Master and Ed. Musk, Twitter judge, says the October 17th trial is still on for now. The judge also says she has not received any filing yet to halt the case. Yesterday, of course, we got that surprise announcement from Elon Musk that he did plan to proceed with the deal to buy Twitter for $54.20 a share. Twitter shares right now, they are at $51.60. They are lower today after yesterday's 20% plus advance. Twitter shares down now by 0.7%. Tesla is down by 4.5%. The Dow, the S&P, NASDAQ, red on the screen, but watching the Dow, little change right now, down by about 0.1%, down 33 points. The S&P 500 index down 8, also little change, down 0.2%. Worst level of the day had been down by just about 2%. NASDAQ lower by 57, drop there of 0.5%. Bottom line here, stocks off session lows, but still struggling to gain further momentum after that massive two-day rally from the year's bottom. 10-year yield 3.75%, 2-year yield 4.15%, spot gold down 0.7%, 17.14 the ounce, while West Texas Intermediate crude up 1.3%, 87.61 a barrel. OPEC has agreed, or OPEC Plus, I should say, has agreed to cut its collective output limit by 2 million barrels a day, stoking tensions with the U.S. as the cartel seeks to halt a slide in oil prices caused by the weakening global economy. Rebecca Babin is senior equity trader at CIBC Private Wealth Group.
I think longer term, this has implications of what we see from the U.S. as a response to this action from OPEC, which is clearly not what they wanted to see heading into midterms. I think that's the key thing to watch. The other key thing here is OPEC is assuming that Russian supplies do not get disrupted when we get sanctions on December 5th. That's a really key variable in this equation.
And we are seeing oil stocks advance. Case in point, ExxonMobil up now by 4.1%. That is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. Carol Master along with Ed Ludlow here in our Interactive Brokers studio. We do want to get to the Bloomberg Big Take today, a story that is also among the most read on the Bloomberg. And Ed, it has to do with Chinese President Xi's first decade, which has created a nation of confidence and anxiety.
And when I was a much younger man, I remember President Xi coming to the United States just before he kind of took the reins of that economy. And now, fast forward 10 years, his approach to life outside of China and the world outside of China is completely different.
Yeah, and increasingly closing off the outside world, right? So let's get to it, and let's bring in Bloomberg Economics Chief Economist Tom Orlik. He is on the phone from our Washington, D.C. bureau. Hey, Tom, great to have you here with Ed and myself. Let's talk about the decade-long impact of President Xi as president of China, because it maybe isn't what everybody initially thought when he first took over 10 years ago.
I think that's right, Carol. When we think about China, the word which often sort of springs to mind on the economy is reform. And normally, when here in the US and in Europe, we talk about China reform, we talk about market opening. We talk about a transition from a more state-controlled economy to a more market-dominated economy. And that was the kind of the hope and the expectation when Xi Jinping came into power. In 2013, he did a big policy review and said, you know what, we do need a bigger market role for the market in how our economy operates. But in the years following that, that's really not the direction that he's taken. So the Chinese economy in 2022 is more closed off from the rest of the world, partly because of COVID-0, partly because of trade wars and embargoes with the United States. It's also more state-controlled at home. The space for the private sector has been eroded. The space occupied by the big state-owned firms has expanded.
Tom, when you packed your bags at Her Majesty's Treasury in 2007-8 and you moved to Beijing, I suppose you've seen the full spectrum of that change, right, over the last 10 years or so. You're back in DC now, but you spent a long time covering China. Was this something that happened knee-jerk in response to the pandemic, or was this something that Xi has kind of transitioned towards with the economy and politically over a 10-year period?
You know, it's interesting, Ed. When I got to China in 2007, the guy in charge was Hu Jintao. And the story we told about Hu Jintao was, this guy's too consensus-oriented. He's a committee guy. He doesn't want to offend anybody, and so he can't get anything done. And so implicit in that analysis was the idea that China needed a strong man, right? Someone who could bang heads together, who could make difficult choices. Well, that's what we got with Xi Jinping, right? Xi Jinping is this kind of muscular leader, certainly not afraid to make enemies. The trouble is, of course, that from a Western perspective, from a Wall Street, Washington, D.C. perspective, his strongman sort of ability is not taking China in the right direction. It's not taking China in a pro-market, pro-opening direction. It's taking China more in direction of being more closed, with an economy more dominated by the state.
Yeah, and not afraid to make enemies among those outside the United States. What did leaders get wrong? There's a great line in the story that talks about when President Xi took office, the former Secretary of State Hillary Clinton talking at a banking conference and talking about China's new leader, worldly, sophisticated, more effective than his predecessor, Hu Jintao. And this was according to some documents, I think, released by WikiLeaks. What happened? Is it a different President Xi, or did the world just get him wrong back then?
You know, I think it speaks to the opacity of the Chinese system, Carol. I think when we talk about the economy, when we talk about companies in China, often we overstate the lack of transparency. If you sort of read the accounts, if you read the statistical reports, you can get a decent idea of what's going on Chinese company balance sheets, how their economy is doing. But when it comes to the political system, really, there's not a lot of light getting in there. It's pretty hard to understand how decisions are made. It's pretty hard to get a grip on the kind of the personality, the motivations of a leader like Xi Jinping. So, yes, there was a kind of a misunderstanding, estimates of who this guy was and what he was going to do back in 2011, 2012, 2013 turned out to be wide of the mark. I think that's substantially a reflection just of how hard it is to get good inside information about Chinese top-level politics.
Well, it'll be interesting to see what's to come, because he certainly will be there for some time. Bloomberg Economics Chief Economist Tom Orlick, thank you so much joining us on the phone from our Washington, D.C. bureau. Kind of interesting, too, in terms of the mind think, how it's changed about how much potential for China, right?
And this is a guy, Tom Orlick, who's led economics, but also has been on the ground in China and seen it firsthand.
Yeah, exactly. But the world's perception has definitely changed in a big way. All right, folks, you are listening to Bloomberg Business Week. Let's get back to D.C., check on world and national news, and back to Nancy Lyons. Hey, Nance.
Thanks, Carol. President Biden this afternoon is surveying damage from Hurricane Ian in Fort Myers, Florida. That city's mayor, Kevin Anderson, says about 84% of the residents there have their power back.
It's great to come across people that are in good spirits. They know it was a serious storm, and they know it's going to take a while to get things back up and running.
Anderson says most of the damage is along the river, but roads are now open. President Biden will be meeting with local officials and Governor Ron DeSantis. The Republican governor has praised the federal government's response since the Category 4 storm made landfall last week. Well, a new poll is out in a race that could help determine control of the Senate in the midterms. Bloomberg's Nathan Hager has more from Washington.
The survey from Monmouth University shows Republican Mehmet Oz closing the gap with Democrat John Fetterman in Pennsylvania, with 43% support to Fetterman's 48%. That puts Dr. Oz close to the margin of error in this survey. Just this summer, Fetterman enjoyed up to a 12-point lead in the 538 average of polls after a tough GOP primary and trolling from Fetterman about Oz's New Jersey roots. Fetterman Fetterman still has a 12-point favorability gap over Oz, but the Republican has a slight edge when it comes to voter motivation. In Washington, I'm Nathan Hager, Bloomberg Radio.
The estate of the cinematographer killed on the set of Rust is reaching a settlement with actor Alec Baldwin.
Connection
Elena
lost.
Hutchins was shot and killed when Baldwin discharged a prop gun after he was informed it was cold. Hutchins' husband, Matthew, announced the settlement and said the wrongful death case will be dismissed. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much, Nancy Lyons, in our 99.1 newsroom in Washington, D.C. I'm Carol Master, along with Ed Ludlow, our Bloomberg News West Coast correspondent here on the East Coast. Do you own your home? Are you looking?
I wish. I live in San Francisco, California.
Oh, that's not too expensive.
Oh, it's expensive.
I know it is. I know it is. It's kind of crazy. I mean, it was funny. Not funny. I was looking at the mortgage rates here in the United States, and they are up for the seventh week to the highest in 16 years, 6.75% fixed 30-year for the last week of September.
16-year high. Incredible.
An MBA index of applications to buy and refinance a home have tumbled, no surprise. In the meantime, great story by our Alex Tanzi on the Bloomberg terminal about how Seattle overtook Boston to become the third richest major U.S. city by household income.
Well, do you know what's so astonishing about this story? What? The data is relative to 2019 because the household income data for the 2020 period was all over the place. But it gives a real reflection of how certain cities and the people within them fared during the pandemic period. And I find this so astonishing. You and I were talking off air about Chicago. Well, Chicago saw one of the biggest drops. Yeah. And I think that's really important.
Well, if we go through this list, right, so we have shifts in median household income by the 25 most populous metro areas. So we mentioned Seattle overtaking Boston, Charlotte jumping 2 spots in the rankings because of a strong rebound from the pandemic again. This is new data from the Census Bureau. What jumps out for you in this story?
Seattle, because of my West Coast home, but people forget Seattle is as much a tech city as San Francisco.
It really is, right?
You have Amazon, you have Microsoft in the great Seattle-Redmond area, and they retained workers, they looked after workers in the pandemic. Is that a surprise? I guess not.
People love living there too.
It's a beautiful city.
I always love when you get to something like the median household income for 2021, ranging from about $116,000 in San Francisco to about almost $63,000 in Tampa. It just gives you an idea because we get some warped views here on the coasts.
Right.
This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. The Dow just turning positive, up now by 1 point, wiping out earlier losses. S&P little change, down 0.1%, down 4 points, and we've got NASDAQ down 38 points, a drop there of 0.4%. Keep in mind, in the early going, we had the S&P down by 2%, but again down now by 0.1%. The 10-year yield 3.76%, 2-year yield 4.15%. Spot gold down 0.6%, 17.15 the ounce, while West Texas Intermediate crude is rallying 1.4% after the OPEC Plus announcement this morning. Right now, WTI 87.77 a barrel. The trial in Twitter's lawsuit against Elon Musk remains on track to begin October 17th because the court has not yet received an agreement from the parties to put the case on hold. This according to the Delaware judge overseeing the matter. She said that in a letter. Right now we've got Twitter down by 0.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie Pellet with the Bloomberg Business News Flash. You are listening and watching Bloomberg Business Week on this Wednesday. Carol Massar along with Ed Ludlow. Ed is in for Tim Stanovic. And Charlie mentioned too, and those headlines that the judge in the Elon Musk Twitter trial saying she hasn't received any filing yet to halt the case. And that says that October 17th trial is still on for now. So I feel like, Ed Ludlow, you've been covering this story. You're here, the editor of Bloomberg Business Week, also in our studio. It's a story that keeps on giving. Just when we think we're getting to an end.
Yeah, I mean,
maybe not.
As it stands, I'm still off to Delaware. But what I would say is language is important, right? So Musk said, you know what? I will buy Twitter for $54.20 a share. What did Twitter say? Twitter said, we're committed to closing the deal at $54.20 a share. Nowhere did they say, we accept your reoffer, Mr. Musk. So we've been waiting to see what they'll do, whether they drop proceedings against him, and now we know they are yet to do so.
All right, we also want to bring in, we mentioned Joel Weber is with us, the editor of Bloomberg Business Week. So too is Bloomberg's Sarah Fryer, who's writing about Elon's turnabout as well. She's Bloomberg News Big Tech team leader, author of No Filter, the inside story of Instagram, She joins us on the phone from San Francisco. But Joel, I mean, if you had to put this story to bed, what would you do right now for the cover?
You call Sarah and say, hey, what's going on? There's a piece of art that we commissioned to go with Sarah's story that is the art of the moment. It's a Tesla covered in bird poop, it's awesome and it's perfect. And my headline for it is Twitter's turn. And I think, and I think this is also what Sarah ultimately writes here is, for a while it's been sort of like, who's actually in charge right here? Who got the high ground? And I think what this shows is that Twitter now officially has the high ground. So Sarah, talk to us about how you express that idea.
Well, I think that what Elon Musk is offering here is what he's already offered. He's already said that he would buy the company for $44 billion. This doesn't give Twitter anything that they didn't already have, so they have no reason to take him at his word, because let's look at how his word has happened, how it's resulted in prior occasions, right? He said he would join Twitter's board, and then he reneged on that shortly thereafter when he got in an argument, and then he said he would buy the company, and then a couple weeks later he said he wouldn't. So I think that Twitter really has no reason to trust him, and I don't see a scenario where they are going to just take this new offer and call it a day. I think that they're going to be really careful and if they're wise, to keep the lawyers involved.
So the alternative headline doesn't go quite as well with the image that I proposed, but show me the money.
Right, absolutely. I mean, I think that's really the ticket here. I mean, we know that the funding is in place. We know that everything is as it should be to close the deal. Nothing has really changed on that front. What has changed is it's been a particularly embarrassing few weeks for Elon Musk. His private text messages have become public. He's
I've been dying to do just a
staring down
table
a
read
deposition.
of all of those text messages,
Right.
Sarah, just for go through them all. But anyway, go ahead.
Oh my goodness, there's so many gems. But yeah, I think there's that. But he is. I talked to a lawyer today who said the most cynical view of this move from Elon Musk is that he is maybe trying to pressure Twitter publicly into dropping the suit, and then he might still not buy Twitter,
Right.
and it might find another reason to
It's
drop
like one
out
of these
this.
stories, Joel, where you're like, this cannot get any more weird, and you walk into work on a Tuesday and suddenly it gets more weird. But as Sarah's point, we learned a lot from the discovery process, the text messages. You wonder what we didn't learn, and this is part of our Bloomberg reporting. What would we have found if that deposition goes ahead and then it's filed as evidence, Joel, later in the week, if a trial happens?
Yeah, perhaps you'd like to go to Delaware for us and find out.
Well, as it stands, as I say, I am going to Delaware. But
I mean, and look, like this is why it's like the best business story of the year. I mean, you think about where this started. I mean, think about, and Matt Levine wrote this, and that if just from a money standpoint, like Morgan Stanley, this does not look good for Morgan Stanley. When all this was proposed, it all sounded great, and like we are in a completely different economic environment now. He's
in terms of the financing, right, cost?
Yeah, we're talking about the debt here, right?
Yep.
That
Yeah.
Musk lined up as part of his funding for the deal.
And so I think the conversation is and how much bashing Twitter has endured here, and ultimately, Sarah, I thought the most interesting thing of that you had in the remarks ultimately is this scene that you culminate with, which is this conversation that's happening at Twitter when this news happens, right? Take us there.
So at Twitter, my colleague Kurt Wagner has many sources at the company, and he found that they were listening, of all things, to presentations from teams on their 2023 plan, which, if this deal goes through, it's a total waste of time because Elon Musk has very different ideas about how to run Twitter. And what was interesting was, nobody really stopped to acknowledge that this news had just gone by, and I think that this is just a company that's used to being in limbo. They're always finding themselves at the center of some drama or another. They've had activists on their board. They've shuffled through leaders. They've been in acquisition flirtations in the past. So I think that these employees, they're also. They can complain on Slack or make memes of the situation, but I do think that these really big decisions are probably going to wait until we actually know whether Elon Musk is going to own this company.
Yeah, I was told by a source, Sarah, as you know, that in the first 15 minutes of that meeting, Parag Agrawal, the CEO of Twitter, made a presentation and then disappeared from the meeting. And for 2 or 3 hours, employees sat there while the news was breaking all around them, and nothing. There was silence.
It's amazing.
Sarah, what happens next? Very quickly.
Well, I think we have to see how Twitter responds. The two sides are talking today. Whether an agreement will come out of that, we might hear today. We might not. The judge has said she has not received a filing for a request to stay the case. So that means that things are not all settled. We still have some. Twitter clearly still has some discussions they need to have to be to their satisfaction.
It's like an episode of Billions.
Oh,
right?
I mean, let's have our own show about this.
We're way past the far-fetchedness of Billions, guys.
But my most favorite thing here is Delaware.
Yeah.
Delaware. All right, Sarah Fryer, thank you so much as always. Big tech team leader, Bloomberg News, also author of No Filter, the Inside Story of Instagram. These are the remarks this week?
Remarks, indeed.
All right. In
Twitter's
the
turn.
upcoming issue of the magazine, of course, that was the voice of the editor of Bloomberg Business Week, Joel Weber. This is Bloomberg Radio.
down to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close. We have but 60 minutes left in your trading session. Caroline Hyde, Romain Bostic, Taylor Riggs. We're joined now by our colleagues Carol Masser and Ed Ludlow in for Tim Stenowik.
Wow.
Together, we welcome across TV, radio, and YouTube an audience that is kind of whiplashed by 2 days of gains and then, well, a 2% drop at one point, Carol, that we managed to erase.
Talk about a whiplash right today. We're at our highs of this session here. We're green on the S&P and the Dow. And I've been looking for some outperformance, and I'm finding it in those casino names in particular. In fact, the group over the past 3 days up about 14%. The optimism over a travel rebound during the 7-day Golden Week holiday period. So we're talking about gambling in Macau. So check it out. The group today up 1.4%, but whether it's Wynn, Las Vegas Sands, or MGM, Ed, we're seeing them move ahead.
I'm just going to interrupt you here for a second, Carol. We're getting comments right now from the President of the United States, Joe Biden, down in Florida, examining the hurricane damage.
We're in a situation where the Colorado River looks more like a stream. There's a lot going on. And I think the one thing this has finally ended is a discussion about whether or not there's climate change and we should do something about it. But folks, I also want to, Jill and I have had you all in our prayers, and I mean that sincerely. And we're here today because we wanted to tell you in person that we're thinking of you and we're not leaving. We're not leaving until this gets done. I promise you that. You know, when you walk around here, what's left of Fisherman's Wharf, and you don't have to have much of an imagination to understand that everything, this historic, titanic, and unimaginable storm just ripped it to pieces. You got to start from scratch. Got to move again. And it's going to take a lot of time, not weeks or months. It's going to take years for everything to get squared away in the state of Florida to fully recover and rebuild. We're here today with Governor DeSantis and Senator Rubio and Senator Scott and Congressman Donald. You know, today we have one job and only one job, and that's to make sure the people of Florida get everything that they need to fully, thoroughly recover. We're one of the few nations in the world that, on a basis of a crisis we face, we're the only nation that comes out of it better than we went into it. And that's what we're going to do this time around. Come out of it better, because this is the United States of America, and I emphasize united. We've seen extraordinary cooperation at every level of government, as the governor has said, and the cooperation began before the storm hit. Number one priority was saving lives. At the request of the governor, I signed an emergency declaration. Let's see if this thing works. Is this one working? I signed an emergency declaration that prepositioned federal assets, including food and water and generators, not only in Florida but in other states. So be ready if the worst happened, and it happened. We also prepositioned the largest number of search and rescue teams ever assembled in the United States. Ever assembled in the United States. And FEMA, the Pentagon, the Coast Guard, other agencies, so we'll be ready to respond immediately, working with state and local officials. And the search and rescue teams have knocked on nearly 70,000 doors and rescued over 3,800 people. Yesterday, Lee County alone, the search and rescue teams examined 24,000 structures just in this county, making sure we're accounting for everyone who still may be trapped. We have over 4,000 federal personnel on the ground as I speak. The Army Corps of Engineers providing emergency power to hospitals across the state, nursing homes, water treatment plants, to make sure these facilities are able to continue to operate. Tens of thousands of utility workers all across America, not just in Florida, all across America responded to the call from Florida that needed help. Thousands from all across America, working around the clock to get power restored. This is about America coming together, and I really mean it. America coming together.
We're listening right now to President Joe Biden down in Florida, along with the Florida Governor DeSantis, surveying the damage from Hurricane Ian. The president, of course, talking about the commitments that the federal government and the local governments have made to help get folks back on their feet. You can continue to listen to the president's comments on the Bloomberg terminal by typing live go onto the terminal. We do want to get back, though, to what's happening here in the markets. A day where we started out with all of the major indices deep in the red, 1 to 2% 0.2% here on the day, now pushing back into the green. Romaine Bostic here alongside Taylor Riggs, Carol Massar, Ed Ludlow, and Caroline Hyde. And more than half of the stocks right now in the S&P 500 are in the green, up about 0.2% on the aggregate basis.
And you see that on some of the individual sectors as well. Energy, tech, healthcare, industrials, all up here in the green, though real estate and utilities still very much here to the downside because those are most of the rate sensitive sectors, and yields again are just continuing a relentless climb higher. Well, about 50-50, Romaine.
Yeah, 50-50 here. We talk about some of the big names, the individual movers. Tesla shares down once again here, down about 3.6%, as a lot of people still try to assess sort of what's going to happen with that Twitter deal and whether there are broader ramifications for Tesla itself, whether this is going to split Elon Musk's time even more than it has, or whether he's going to have to come up with some more money in another way. Freeport-McMoRan down here on the day, but two bright spots. Taiwan Semi up almost 3% here on the day, and ExxonMobil up almost 5% here on the back of some relatively bullish outlooks by both of those companies.
Let's talk about where volatility is at, because it has been under control once again, particularly in the stock market. We're not going to talk about the move index or FX. We're talking about the VIX here, and we are well off some of the capitulation levels, as many would call it. And maybe the capitulation isn't just from the market, but also from the Federal Reserve. We've had a lot of talk, of course, today about whether we'll get pivoting or not pivoting from one Federal Reserve. Well, maybe you need the VIX to go above 40 for that to happen. There's a great chart on the Bloomberg. Market optimists are betting that the Fed pivot may need to wait until the volatility rises, Carol.
Don't say pivot. Mary Daly certainly saying that, throwing cold water on those expectations for a Fed rate hike come 2023. She's, of course, the president of the San Francisco Fed. Check it out.
I don't see that happening at all. I see us as raising to a level that we believe is restrictive enough to bring inflation down, and then holding it there until we see inflation truly get close to 2% and demonstrate that price stability is restored.
That, of course, is Mary Daly, the president of the San Francisco Fed, really throwing cold water on that idea of a pivot. But I got to say, looking at the equity trade right now, investors kind of have their own mindset when it comes to their expectations for Fed rate policy. That's a wrap. Our cross-platform coverage will be back in less than an hour's time on radio, TV, and YouTube. We're going to count you down to the closing bell on this Wednesday, Beyond the Bell, right here on Bloomberg.
This is Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, everybody, you are listening and watching Bloomberg Business Week. Carol Massar along with Ed Ludlow. It's fast and furious. It's not just about Elon Musk and Tesla and Twitter and all that good stuff.
No, we're still concerned about the Fed and global economy and rates, and also good data being bad news.
Yeah,
Lots to discuss.
Well, and it's interesting, though, because the bounce back that we have seen on the equity side of things, recouping, a 2% loss, roughly, I think, in the S&P 500 today. So once again, we'll see. We still have about 40 minutes left in the trading session, but we will see if we will ultimately turn this two-day rally into a three-day rally on stocks. Some would say maybe then again, we're getting closer to capitulation.
Hey, what's
maybe
going on
bottom.
Wall Street? We were euphoric Monday, Tuesday. You get that good data and the market wakes up and has a little freak out, and by the end of the session, hey, we've got our gatherings together again. We're good.
Yeah, well, it's interesting, and interesting to see the buying as we get closer to the close. So we'll continue to keep a track on that. As we said, once again, the S&P 500, slight gain there, up just about 2 points. The Dow Jones Industrial Average, a gain of 31 points. NASDAQ still in the red, down about 11 points, but again, way off those lows that we saw earlier in the session and just coming off our highs. So it'll be interesting to see. And again, don't forget, right, on Friday we get the jobs report, and again, going to continue to show those strength in the U.S. labor market.
Yeah, especially after data that we showed earlier in the session that basically the jobs market seems robust, expansion in services. I would say on the NASDAQ 100, Tesla a pretty major drag on the index at this time. And remember, everyone's worried, is Elon Musk going to sell stock to fund his purchase of Twitter?
Right, actually certainly one of the names that we've been watching. But it's interesting, too, if I take a look at the S&P 500, how the rally as a result off those lows, it's really broadened out. So right now we've got kind of about 248 names in the S&P 500 higher, 254 lower, whereas earlier in the session, you saw most names down on the session. So you're seeing certainly some bullishness, risk on, come back into the market. All right, right now we do want to get another update on world and national news. For that, it's over to Nancy Lyons. She's in D.C. Hey, Nance.
Thanks, Carol. A SpaceX flight is on its way to the International Space Station. There are a couple of firsts with this one. It is the first time a Native American woman has been in space and the first time a Russian cosmonaut has been on a SpaceX flight. Japanese astronaut Koichi Wakata says he's thrilled to be back in space a fifth time.
You know, it was a smooth ride, and I see all the three happy faces here. It's back in zero-G, and I appreciate all the help to give us a smooth ride and training. And thank you so much.
The trip to the space station for Wakata and the others will take 29 hours, and they'll stay up there for about 6 months. Winter has traditionally been cold and flu season, now COVID season, and a significant part of the American population remains unvaccinated and or unboosted. We get more from Bloomberg's Irv Chapman.
A lot of people have had COVID, but how long their immunity to getting it again will last is still uncertain. Lauren Althoff of Johns Hopkins University said in a Bloomberg interview.
The wild card is going to be COVID plus other respiratory viruses. We are now predominantly unmasked. So doing your part to get vaccinated, doing your part to stay home when you're ill and prevent that transmission to others is really key as we head into the winter season when we're indoors.
Althoff said that Australia, which just had its winter, experienced its worst flu season in several years. In Washington, Irv Chapman, Bloomberg Radio.
A new report out today by the Commonwealth Fund says COVID-19 deaths and hospitalizations could soar fourfold at the current vaccination rate if we do see a winter surge. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy Lyons, thank you so much. Nancy there in our 99.1 newsroom in Washington, D.C. Carol Massar along with Ed Ludlow. Ed is in for Tim Stenovic, who's on assignment on this Wednesday. Nancy Lyons just talked about COVID-19 deaths and hospitalizations could soar fourfold at the current vaccination rate under an upcoming winter surge. This is according to an analysis released Wednesday. So I don't know about you. The barriers are down in our office. The barriers are down at security when you walk in. I don't have to do the app to say I'm COVID-free. I'm on the subway, I'm wearing my mask, but it is definitely a world where you're like, oh, wait, we're still in a pandemic.
You forget, and you walk down 3rd Avenue in Manhattan, you forget, you walk through San Francisco and any other major U.S. city.
Is it
and
like this on the West Coast?
It's like this on the West Coast. You remember, I think that it's mask off, but I would say more people wear masks by choice in the Bay Area. And for our global audience, I'm from the Bay Area, that's why I'm talking about that. But in this story, the data is really surprising to me. Just over a third of eligible Americans have had their first COVID booster shot. I can't even remember getting my booster shot. It was so long ago.
I agree.
You know, and that,
are you double boosted?
I'm not double boosted, but also, I haven't fallen into eligibility. So I think what's really interesting for me is that, for me, life is normalized. For many, it isn't out there.
Yeah.
And that's what's so shocking in the data.
Well, the report from the Commonwealth Fund underscoring the need for a fall booster campaign that the study authors say could save tens of thousands of lives and billions of dollars in medical costs over the next 6 months. And they say despite advances in vaccine development against COVID-19, uptake has dwindled and federal funding for vaccine rollout is in jeopardy. This is coming from Allison Galvani, one of the study authors, putting this out in a statement. Just a reminder that being vaccinated, getting boosted has made a huge difference.
And why do we care? Because the data, they say, proves that if we don't pick this up, we could have 16,000 hospitalizations and 1,200 deaths a day by March 23rd.
Right, and those figures more than 4 times what's currently happening in the U.S. based on data from the CDC. So just something to think about, everybody. I had COVID twice in June, so I got to think about when I get my next booster. Right, you did too. This is Bloomberg.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. What a turnaround for the U.S. equity market. We've got 43 minutes to go ahead of the closing bell. The Dow, the S&P, NASDAQ all in the green after steep losses earlier in the day. 3 in a row right now. Let us head over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks with an aggressive reversal off those morning lows. Dow's now higher by 114 points, was down 430. S&Ps are higher by 13, and NASDAQ climbs by 25. The U.S. 10 yield at 3.76%. Gold is lower by 9. Oil is climbing, and Bitcoin is down by 0.5%. Among the main 11 S&P sectors, energy, healthcare, and tech were in the green. Utilities and real estate were under pressure, and leaders to the upside in the Dow, Nike, Visa, and Chevron, while Goldman Sachs and J.P. Morgan led to the downside. After earnings, Helen of Troy reversed losses of 17%, is now higher by 6%. And in other news, Morgan Stanley upgraded Ford to overweight. Wrapping things up, Resources Connection reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. Keep it locked into Bloomberg to see how things shake out at the close and, of course, how Asian markets react tonight. Now, to hear live breaking news over your Bloomberg type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Got it, Charlie. Thank you so much. So as we've talked about, I just got to pull up actually Twitter because with the market turnaround, I just want to see what Twitter's doing. Still down about 1% because there's still some uncertainty whether or not Elon Musk will cross the finish line when it comes to buying the company. Meantime, I love this. Elon, I feel like Ed is flashing that new shiny thing, which he is good about doing, and it's called what? X, the Everything app?
Yeah, I mean, we always talk about this in the context of Tesla, right? That one of his skills is keeping everyone looking to the horizon.
Look over here.
Forget what's happening right now. You know, here's
look away. Look away from the fire.
Honestly, X. What is X? I don't know. Do you know? Does our next guest know? I guess we should find out.
All right, Tom Giles, come on in, executive editor of Bloomberg Technology. He's with us from our San Francisco bureau. All right, Tom.
Thanks for having me.
So great to have you here, the three of us. Fun conversation. So what is X?
Well, based on yesterday's tweet, he's calling it X the Everything app. It makes me think of the Everything store, right, that Amazon wants to provide all of these services and sell all of these items to everybody around the world. What he's talking about, what he's alluding to, is some kind of a super app. It's a one-stop shop where you can go and do much more than what you can do on Twitter now. It's already a very useful tool for those of us who are big Twitter users.
No, we all tweet every single day. All of us,
right?
All three of us.
You know, what we're up to, stuff we're reporting on. But he wants to make it more useful. One of his complaints, and he has many complaints about Twitter, is that he wants it to be more useful to people. And what he's alluding to is the way that companies like Tencent in China have used WeChat and turned it into something called a super app. That's something, like I said, a one-stop shop where you can go and do much more than communicate. You can have your DMs with folks. You can have group chats, but you can also do things like book cars. So it plays the role of an Uber, or you can use it to order in food. So it's your Grubhub. You can use it for a whole host of services. And this is something that has taken off in parts of Asia and certainly gained a lot of popularity in China, where Tencent is, where WeChat is everywhere. And he would certainly love to have Twitter have that same kind of usefulness.
Well, I mean, to me, this is logical because I believe I'm right in saying Musk said he wanted to grow Twitter's user base from around 235 million now to 1 billion. And you wonder, how's he going to get there? Right. I mean, we use Twitter actively. Much of the press does and the media. But you wonder who the new audience for Twitter will be. I mean, what other concrete proposals do we have from Musk, Tom?
Well, he's compared it to TikTok and wanting there to be more functionality in terms of the stuff that you share on the blogging service. Right now, Twitter is still very much a tool that we use for short tweets that are, full of our words. And sometimes there's images and sometimes there's video, but it's not a big video sharing site. But there's a lot of things. I mean, remember where Elon Musk got his start, which was in payments, which is in, revolutionizing the way people send and receive money. So imagine, if you will, if he has his way and if he, can unleash his engineers and get them to, make the products that would make it more effective. Think about what if Twitter was more of like a payments company where you could use it to carry out transactions in the way that we currently use Venmo or PayPal or some of these other services. What if you could do other carry out other financial transactions with it? And I mean, the other thing that people, Tencent is also a big entertainment purveyor of entertainment. We don't think of Twitter as being a platform for that kind of thing.
Yes.
We think of that more, that's more YouTube and to some degree even Facebook. But and obviously, Apple and some of the other sellers of devices that we have. The problem that I have with this concept of a super app is, while it has taken off in parts of Asia, in the United States, we've become really, really accustomed to having a whole slew of apps on our phones. We're very comfortable with it. I find it kind of clunky, and I'd love the idea of something more like a super app. The problem is we're really entrenched, and we've really become accustomed to having, 100 apps on our phone and just, scrolling right and left to get from app to app. We've grown accustomed to it, even though it's clunky, even though it's inconvenient. If he could revolutionize that, it would certainly be a sea change in the way at least people here in the United States use our smartphones.
Yeah, I mean, I agree with you. I'd love to have like some streamlining. I have so many apps, but I do wonder, like, how do you move from where we are today to kind of an aggregator to almost to some extent where it's one-stop shopping. Great stuff. Tom Giles, thank you so much. We always appreciate when you can find time for us. He's Bloomberg Technology Executive Editor, joining us from our San Francisco bureau. But I do kind of am blown away again by Elon and his ability to get us to be having a conversation about something else.
Tom leads our coverage of tech. He leads the team, and we're already looking to the what next. We're not really sure what now. Those headlines that the trial's still going ahead October 17th.
We're not done yet.
We're not done yet.
I really want to know about that white robot, that humanoid.
Let's stick on topic.
The human in the bodysuit. Oh my gosh, can't make this stuff up. You are listening and watching Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, we're watching a lot of things here on Bloomberg Business Week. I'm Carol Master along with Ed Ludlow. And one thing we've been noticing, Ed, is, of course, what's going on with the energy markets and concerns about, you know, a bigger than expected cut by OPEC Plus.
Right, and in many senses, there's a cut in name only. Because you look at the reality on the ground, and the output doesn't change all that much.
That's a really good point. All right, we're going to get into the nitty-gritty details, something like that,
Something
right?
like that.
Charlie Pellet, we're tracking the energy markets and so much more. What do you got?
Let's begin with crude oil. They're up 1.4% right now. West Texas Intermediate, 87.75 a barrel. Brent, the global benchmark, up today after the OPEC Plus meeting, up 1.8% right now, 93.42 a barrel on Brent crude. Let us also talk about what's happening with the U.S. stock market today, right into the nitty-gritty with the S&P 500 index up 8. That is a gain of 0.2%. What a turnaround today for this market. At the worst level, we had the S&P down by 2%. Stocks erased a sell-off that approached 2%, extending the rebound from this year's bottom. All happened around noontime. The Dow up 90, higher by about 0.3%. NASDAQ up 9 now, a gain there of 0.1%. Going to be very interesting to see how things shake out heading into the close. 10-year yield 3.75%. The 2-year yield 4.15%. Spot gold down $9 the ounce to $17.16, a drop of 0.5%. Federal Reserve Bank of San Francisco President Mary Daly sees a high bar for slowing the central bank's 75 basis point pace of interest rate increases, though she is watching key data between now and their November meeting. Daly was interviewed this morning by our Michael McKee. You heard it live on Bloomberg Television and Radio.
What I see is that inflation will release some of the pressure we've seen this year, but probably end next year at closer to 3% than 2%. And then it will take another year to fully get it back down to our 2% target. Now, if we get better numbers than that, well, that's terrific. But we have to be prepared for inflation to be a little more persistent, because it has been a little more persistent than I think most people expected so far.
Forecaster LMC Automotive sees passenger car sales in 2023 set to trail levels from before the pandemic for a fourth year as supply chain constraints give way to a drop in demand. Automakers, they're lower today, with the exception of Ford, up 1.5%. GM, though, down 2.4%. Stellantis down 2.3%. Stellantis, the parent of Jeep, Chrysler, Dodge, Ram, Alfa Romeo, and Fiat. That is the latest, and I'm Charlie Pellet. That is the Bloomberg Business Flash.
Thank you so much, Charlie Pellet there. All right, Carol Master, along with Ed Ludlow. He is in for Tim Stanovic on this Wednesday. We've been watching WTI crude up for a third day in a row. Gains slowing a little bit after a nearly 9% jump over the past couple of trading days. This as members of the producer group OPEC Plus advised cutting as much as 2 million barrels a day from current output limits. A lot to get to, so let's get to it. Let's get an update on the energy trade. Here is Bloomberg Intelligence Senior Commodity Strategist Mike McGlone. He is on the phone from Miami. So, Mike, what do we need to know about these potential moves by OPEC Plus?
Hi, Carol. They're doing what a cartel should do to sustain prices when they view a potential collapse in global demand coming. And that is really what's happening. And the interview with Manas Krani, with the Saudi oil minister, he pointed that out, not so many words, but he said his point is they need to be assertive, preemptive, and proactive. And a key word he said is he wants to make sure he provides guidance that's crucial so it's safe to invest. And I look at this as this is a green light for U.S. producers to bring on more supply, because for the last 10 years, that's been the major pressure that's keeping prices down. So the price you see on the screen right now is the same price as October 5th, 2007, just about the same price. So to me, that's the key thing to think about. And also now this adds to the tightening from central banks if they try to keep prices up.
So, Mike, I used to charge around Vienna. And I was lucky that I would go around essentially harassing OPEC and then later OPEC Plus ministers. And you try to get the headline number. What is the cut to output or the boost to output going to be, right? But in this sense, is this not just a cut in name only? I look across some of the members and they're kind of pumping below their quota levels anyway.
Exactly, you nailed it. They're doing a good job of jawboning, and the minister said it, and the way they described it is they're taking lessons from the Fed, trying to sustain prices. Remember, that's their goal, sustain higher prices. So they're doing a good job of it. The actual cuts will be a different story, but the key thing to remember about OPEC is the last few times they cut a lot was when prices collapsed. That was 2020, and before that, 2008. And to me, that's what's happening now. The risk is that we see further declines in prices, and they see it coming. Just look what happened to copper today. Copper declined, partly because it sees if prices stay high for crude oil, it makes this global economic tilt towards recession accelerate, and that's clearly what's happening. He did point out issues with China and U.S., all the central banks raising rates. So to me, this is just reactive to what I see as an enduring bear market resuming in crude oil.
Well, and the whole commodity space has really come down from earlier elevated levels. And, pick a particular commodity, whether it's lumber or some others, as you point out, Mike. Does it tell you that we are indeed, quote unquote, in recession or headed towards one, or what?
Headed towards one clearly. Now, that's from a lot of Bloomberg, the global economic GDP trackers. If you have a money supply, we have a measure of global money supply. It's collapsing. It's the greatest collapse we have since 2008. It's down 4% in a year, and that's global. So it's just a matter of time. And the key question I like to ask is, what changes this trajectory? Certainly not OPEC cutting supply. And to me, that's the key thing to think about here. Sure, the markets got oversold. They should bounce, but that's what's famous for for bear markets in stocks and crude oil. So I look at it as there's a pretty good ceiling at $100 a barrel. And you look forward, I see it still heading towards 50, which was kind of the sustainable price before COVID. And again, it's still above the U.S. cost of production. The key thing to remember about this year is U.S. supply will probably exceed the high from before COVID. And if you include Canada in there, the excess is going to be up to 3 to 4 million barrels a day, which is quite substantial, certainly if you keep prices at these levels.
Yeah, to Carol's point, I'm looking at the Bloomberg Commodity Index, really pulled back from its June high. But to your point as well, Mike, you have the U.S. coming out saying on the oil story, well, we'll just release barrels from the strategic reserve in November. And isn't this just kind of becoming a bit politicized, a tit for tat?
Absolutely. Well, that was kind of key, the point that some people, other analysts nailed, and we're glad to hop on. When you have the world's largest oil producer and the party in power needs prices to be lower, you expect prices will be lower for the election. So yes, that might be a little bit too much release from the SPR, but remember, the SPR is really not needed anymore except for hurricanes that wipe out supply, because there is an excess, a massive excess of supply
it's a tool,
brewing, including Canada, in this North America. That's what's changed from 10 years ago when we had a similar situation. The U.S. was the net importer, largest importer in the world. Now the U.S. is one of the largest net exporters. And I'm sorry, Carol mentioned lumber before earlier. Lumber's back to unchanged on the year before COVID. So everything's starting to tilt down. Yeah. The key question is, what changes that trajectory? And right now, it's not going to be the Fed or central banks, and OPEC just added to that tightening.
We brought you on to talk about oil, but we got so much more in terms of the
for money
commodity space. Mike McGlone, in an inflationary environment, you're right, we got some value for our money. Senior commodity strategist at Bloomberg Intelligence, of course, joining us on the phone from our Miami bureau. All right, let's head back to the nation's capital, Washington, D.C., for a check on World and National News with Nancy Lyons. Hey, Nance.
Hey, Carol. President Biden is in Florida seeing the devastation caused by Hurricane Ian. He says the federal government will stand by the residents as they try to piece together their lives.
Jill and I have had you all in our prayers, and I mean that sincerely. And we're here today because we wanted to tell you in person that we're thinking of you, and we're not leaving. We're not leaving until this gets done. I promise you that.
The president says federal, state, and local governments will work as one to help rebuild homes, businesses, and lives. The storm has resulted in at least 84 confirmed deaths, including 75 in Florida. Hundreds of thousands of people are still without power. Immigration to the U.S. is rebounding after a sharp 2-year slowdown, but the pickup is unlikely to plug the pandemic-induced gap in new arrivals. Nearly a year after the U.S. reopened its borders, non-American workers are flowing in at a pace just under that seen in 2019. That's according to an analysis by a team at the University of California at Davis. Following Vladimir Putin's annexation of Ukrainian territory, the European Union has approved a fresh package of sanctions that includes a price cap on Russian oil sales. European Commission President Ursula von der Leyen told EU members today gas supplies are even higher now after switching away from Russian supplies.
Let's look at gas storage. It is almost at 90% by now. This is 15% higher than on the same day last year.
Ursula von der Leyen also vowed to seek help from the U.S. and the NATO partners in protecting Europe's energy infrastructure. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nancy Lyons, thank you so much. You are listening to Bloomberg Business Week on Bloomberg Radio, streaming on YouTube. And what's interesting is this story definitely caught our attention by Lizette Chapman. It's Carol Massar along with Ed Ludlow, and it has to do with billionaire venture capitalist Mark Andreessen. Certainly well known to your world that you're often covering, Ed,
right.
And said he decided to, quote, double down on California and stay in the state, even as he likened it to, quote, living in the ruins of a once great civilization.
Yeah, I mean, he's swimming against the tide, sort of. So many names in tech have complained about California or moved their headquarters to states like Texas, city of Austin, Denver, Colorado, you know, the likes of Palantir and Tesla being prime examples. But he talks about this comparison with Rome circa 250 AD. I'm not the strongest on classics, but my understanding is the Roman Empire at that time had stable boundaries, strong government, but sort of cracks on the horizon and concerns abound throughout their empire. And yeah, look, San Francisco and California's got problems.
Well, and it's interesting, right? So I guess it sounded like he was thinking about leaving. I guess he and his family, they bought real estate in Nevada. They also almost bought in Manhattan. Ultimately, as you said, decided to stay in California. And so I guess here is what he wrote. He said, like Rome in maybe 250 AD, we live amidst an enormous flowering of culture and creativity, but the roads are becoming unsafe and nobody is quite sure why.
Yeah. I mean, look,
dun, dun, dun.
There's this theme of venture capitalists and sort of established Silicon Valley names commenting on societal issues.
Yeah.
One of which he points out is the lack of housing supply and affordable housing supply.
Which has been a chronic problem for a while.
And it has been for a long time. You know, the pandemic was a catalyst that pushed a lot of folks out of San Francisco in particular, but it made evident problems that, frankly, they were already there for many people.
Yeah. I'm guessing, though, in terms of housing, not such a problem for him. I guess, you know, he's got the Nevada home. He also bought a $177 million mansion in Malibu last year.
Yes, and I believe that was pretty much the most expensive house sale of all time. So
he's doing okay.
He's doing all right.
Places to go. Maybe we should knock on the door, see if he's got some room for us. All right, you're listening and watching Bloomberg Business Week right here on Bloomberg Radio. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got 13 minutes to go ahead of the closing bell. Will stocks remain in the green? Will we close higher for a third day? Right now, the S&P is up 6, up by 0.1%. What a rebound. You got to keep in mind that at the worst level of the day, we had the S&P 500 index down by 2%. The Dow up 57 right now, up by 0.2%. NASDAQ Composite Index up 19. That is a gain of about 0.2%. So the S&P higher for a third day. Energy giants joining gains in oil after OPEC Plus's big production cut. West Texas Intermediate crude right now up by 1.5%, 87.83 a barrel. Spot gold down 0.5%, 17.17 the ounce. 10-year yield 3.75%, the 2-year 4.14%. Again, recapping key takeaway, big rebound for the U.S. equity market. S&P up now by 3 points, holding on to a gain of 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, appreciate that, Charlie Pellet. It is 3:49 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg Editorial Board. After days of insisting there'd be no backtracking on a mini-budget that caused panic in financial markets, the UK government duly reversed itself this week. Prime Minister Liz Truss and Finance Minister Kwasi Kwarteng confirmed on Monday that a promised cut in the top rate of income tax would be cancelled. This sudden reversal could give the administration a second chance, so long as Truss offers further assurances that she'll be cautious. Among other things, this will mean patching things up with the European Union, taking advice from the Office for Budget Responsibility on taxes and spending, and consulting the Bank of England on the interaction of fiscal and monetary policy. Investors need to see more signs of prudence from the UK's new government, but reversing a misguided tax plan was a good start. This editorial was written by the Bloomberg Editorial Board. For more Bloomberg opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, let's get to it, everybody. Just about a little under 10 minutes left in today's trading session. You heard Charlie break down the numbers. We're just off our highs. We're seeing a little bit of selling in the last few minutes, but we are definitely off our lows of the session. Call it, for the most part, unchanged, but slightly lower when it comes to those major equity averages. So let's get to the drive to the close. Aaron Kennan is back. He's co-founder and chief executive officer at Clear Harbor Asset Management, roughly over $1 billion in assets under management, on the phone from Stamford, Connecticut. Hey, Aaron, good to have you here. Ed Ludlow is in for Tim on this Wednesday. Let's talk about the markets. Do you feel like we are seeing a market capitulation at this point, that maybe we've bottomed out when it comes to equities?
Well, I certainly hope so, Carol and Ed, but I fear that may not be the case when, we sort of look at the historic analog of what tends to happen when markets find bottoms in bear markets. And usually that means the Fed has stopped tightening and they are actually starting to reduce their Fed funds rate. It usually means that the interest rate curve is positive and nicely positive. And usually there's some sort of panic embedded in the market where valuations cut through sort of longer term averages. And we haven't really seen that. We've seen a correction in valuations, but we haven't sliced through those averages. So somewhat cautious there. And on the bond side, probably a little more just incrementally constructive. When you look at the inflation adjusted rates of return, real rates are positive by about 150 basis points now. And if we're sitting here on December 31st, they were negative by about 110 basis points. And so there's certainly more cushion, and there is an alternative on the margin to equities, at least here in the short term.
Yeah, looking at the yield on the 10-year pushing up by around 12 basis points, as following kind of a push higher in yields in Europe earlier. Hey, Aaron, For you, how much of this is a story of good data, bad news in the context of the Fed? We've kind of been talking about this all day on Bloomberg Radio and television.
Yeah, it's interesting. I mean, day to day, earlier this week, that certainly seemed to play out where we had the JOLTS data suggesting that maybe there was some softening in the employment side of the docket, and then we saw the equity market surge, and the dollar was weakening too over the last couple of days, which certainly was a tailwind to, I think, the equity and risk-on trade. But today's a little different. Yet ISM services that were stronger than expected, and the market's unchanged, and bonds are actually selling off in price, higher in yield. So. But I do think the longer-term trend is what you're alluding to, which is the Fed is looking for evidence that the employment picture is indeed softening and that there's a trend line to it. We'll see, of course, payrolls on Friday. But they're also looking for the economic data to play through, and that's been very mixed. We saw ISM manufacturing earlier this week, which was weaker than anticipated, and then, of course, the services number today was stronger. So, we'll have to see. They're certainly caught between a bit of a rock and a hard place, and they know their reputation's on the line. They probably entered the game of raising rates a little too late, and they certainly do not want to be accused of pulling the ripcord on their tightening exercise too early.
So does that mean we're in a recession, we'll be in a recession, or I don't know, how do you see that side of the conversation?
Well, we do debate that question. We have had 2 consecutive quarters of negative GDP growth, so that tends to be the definition. Some refer to that as a technical recession, and others consider it an unofficial one. We'll have to see what the NBER says later on that front. But what I do think we need to be thinking about is where is the trend for earnings? We haven't seen earnings roll over yet. There's an anticipation that that's going to occur in the quarters ahead, and how will the markets react to that? And will they get ahead of it? Is this going to be a shallow recession or a deep recession? And certainly there are lots of sort of varying opinions around that particular point.
Hey guys, just a kind of public service announcement. The NASDAQ 100 just ticking into the red, down 0.2%, joining other major indices. That was a pretty short-lived late rally in the session with about 5 minutes left to go in trading. It's interesting. Is recession priced in? We've kind of seen earnings expectations in equities come down, Aaron, but in a recession, typically you reprice expectations, right, 10 to 20%. And it doesn't feel like we actually have that full recession pricing, particularly in the technology sector, but other corners of the equities market.
Yeah, I think a very shallow recession, I would argue, is probably priced in. But if we are seeing some sort of double-digit decline in, let's say, S&P 500 earnings next year, that's probably not yet priced into the markets. And so we'll have to see how that trend plays out. Certainly, there are headwinds to the strong dollar. It was nice to see earlier this week the dollar weaken, which I think is providing a bit of an airbag for the equity market here. But there's a lot of uncertainty outside the United States, which can, on the margin, keep the dollar stronger, even if our economic data is deteriorating.
So where do you commit new money, which is a question I like to ask everybody. And I'm curious, Aaron, is new money coming in?
Well, yes, and also on the first question, and whenever there's uncertainty, there's concern, and whenever there's concern, there are people that may feel as though they need better advice or they haven't had professional advice before. So we're in the business of providing that to clients and creating risk-adjusted asset allocations and providing advice across their financial life, whether it's an individual, family, or a non-for-profit organization. So for us, we're not heavily tactical, but if we are not at target on certain asset classes, we will make adjustments. I think at this moment, where interest rates are, making adjustments, extending duration on the margin within fixed income makes sense. You can buy an investment-grade portfolio that matures at the end of 2024 with a yield to maturity of almost 5% right now, and that has an average maturity of less than 2 years. You can buy something similar that matures at the end of 2023 with a yield to maturity of 4.70 and has an average maturity of less than 1 year. You had 2-year Treasury yields at the beginning of this year at 20 basis points. Now we're at 4.15.
Yeah.
So we think the 60-40 portfolio makes a lot more sense going forward here than it did at the beginning of the year. And so, on the margin, on a risk-adjusted basis, we think if you're underweight your fixed income exposure, may want to wake up and reallocate on the margin. Also, mortgage-backed securities, Fannie and Freddie mortgages. You can buy them through an ETF or individually. Those are quite attractive, trading below par right now with a 5.5% coupon.
Yep.
Interesting, compelling risk-adjusted return opportunity there, in our opinion.
As you said earlier, there's an alternative to stocks at this point because of the move up that we've seen in various fixed income and yields in particular. Aaron Kennan, co-founder and CEO at Clear Harbor Asset Management, joining us on the phone from Stamford, Connecticut. We're rolling over on those equity averages back in the red. Coming up next, we'll be joined by our Bloomberg TV team for Beyond the Bell on radio, TV, and YouTube. We are counting you down to the closing bell.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Riggs counting you down to the closing bell. And here to help take us beyond the bell, it's our global simulcast with Carol Massar and Ed Ludlow in for Tim Stenovic. We welcome our audiences across Bloomberg Television, radio, and YouTube. And Carol, last time we talked to you, this market was actually starting to move into the green. It looked like we had a nice rally on our hands, but now flipping back into the red with just about 2 minutes to go.
Yeah, definitely rolling over. A little change, but a little bit lower. But I've been kind of blown away by some of the swings. More than 2% in the S&P 500 from high to low, 3% in the NASDAQ 100, and about a 3% swing from high to low in the Russell 2000. So volatility, once again, kind of the name of the game in the trade, Ed.
Yeah, it's another story where good data is bad news for the market, especially in the context of the Fed. We kind of got an advanced look at what jobs data might look like on Friday. We've had that commentary from Mary Daly. And ultimately, with core inflation going up and that good economic data coming in, the economy can withstand higher rates. That's the story, and it will continue to be the story.
Higher rates still impacting some of those big year-end price target calls. We spoke with Barry Bannister of Stifel earlier, and he made the comment, we're all traders. It's so hard to predict now where we are at year-end. But some of the other Caroline calls that we've gotten that are interesting. Citigroup, of course, cutting it based on a little bit more of a severe U.S. recession. HSBC as well, lowering that price target that came yesterday. And that's actually below where we are today when you think about, I think it was a round number of about 3,500.
And it also felt such a day, not only about bond yields, about calls, but about oil markets. And the fact that we did see the push higher in crude, the fact that energy, of course, an outperformer, all about OPEC plus in the day.
Yeah, and to its point here, too, I mean, we have about an 84-point swing on the S&P 500 from a peak to trough. Believe it or not, while that is quite volatile, believe it or not, it doesn't even rank in like the top 20 that we've seen this year alone. On a historical basis, of course, it would be definitely notable. A two-day rally, a strong two-day rally now coming to an end here with the Dow Jones Industrial Average finishing lower by about 0.1%, the S&P 500 finishing lower by 0.2%, and the NASDAQ Composite finishing lower by almost 0.3%. The Russell 2000, which had really perked up here over the last couple of days, lower on the day today by 0.7%.
Yeah, and so with all those swings that we saw in those major equity averages, as you said, from peak to trough, nonetheless, the VIX working its way down just a hair, but nonetheless ending lower on the day, Taylor.
Indeed, Carol. I mean, especially just all of this volatility sort of brings up just more of what we're seeing here. I think we're going to work on the chart. So I might actually have you pass me. Here we go. I love when the control room works on the fly like that. Take a look at this chart when we think about where we are on some of those individual sector levels. Carol, we did have a little bit of green and a little bit of red, but there is some of the red creeping up into the, quote, best performer sector. So let's start at the top, energy. That is just the story of the day with those production cuts from OPEC Plus, and that is just the story of the year. Energy sector is up more than 2% on the day. We come back down to some of the worst performers as well. It's banks, it's real estate, it's utilities, some of the correlations with the rates market, as we've really seen rates pick up as well. And auto components, also the worst performer on the day, off 3%.
All right, do you want to mention some headlines crossing the Bloomberg terminal? Again, Fed speak continues. This from the president of the Atlanta Fed, Raphael Bostic, and he is saying that speculation of rate cuts in 2023, mirroring what we got from Mary Daly, says not going to happen. He's saying this in prepared remarks. He is saying, let me just open this up a little bit. Yep, saying their overreaction, Fed shouldn't overreact if 2% isn't quickly reached. So again, just kind of going through some of these headlines. Also warning against reversing the course prematurely. And then says the baseline is the economy can withstand 4% to 4.5%. So this is talking about the Fed target rate. But again, once again, reminding us no pivot when it comes to the Fed. They're going to continue raising rates, and don't start to think about maybe a change in Fed policy, maybe even, pulling back on rates. So we're getting that from the Atlanta Fed. All right, should we go to some specific gainers? Let's do that in terms. Should we do it?
Keep going. Keep going, girl.
All right, let's keep going. Let's talk about some of the gainers in today's session because there were certainly a few. I want to take a look at Schlumberger because that was top in the S&P 500. Yes, we know the outperformance when it comes to energy names. Yes, we know about possible production cuts when it comes to OPEC+, but this one up more than 6%. There was an interesting story teaming up with an MIT spinoff to limit the amount of water needed to produce lithium, which is a key environmental hurdle for the clean energy raw materials. So this was interesting, gave a lift to that name. Emerson Electric also higher in today's trade after the company was said to be in talks with buyout firm Blackstone to sell off some of its commercial and residential solution assets. And then I wanted to mention Illumina, which was up about 6.5% here, top in the S&P 500 and NASDAQ 100. Noted yesterday that analysts are constructive on the company's outlook, and they've had a bunch of meetings. So we continue to see some gains in this one. Two-day rally of about 15% or so.
Just before we move on to Ed here, I just want to point out, because you were talking about the comments out of Raphael Bostic and the idea of the persistence that they feel like they need to have in fighting inflation. We're actually getting headlines here on Ford. This is according to a Reuters report that they're raising the price of their F-150 Lightning Pro model by 11% for 2023. A truck, I should say, Ed Ludlow, that I think was already priced pretty aggressive.
Well, actually, let me give some context here. The Pro model is what they sell to kind of wholesalers, businesses. It was already priced very cheaply. It's a no-frills where they strip out the luxury components. That was their advantage. They brought it to market really early rather than coming with an expensive model first. Is it a surprise they're raising by that much? Not particularly, I'd say. Let's bring you some decliners. Tesla, one of the worst performing stocks on the NASDAQ 100. We've talked all day about how there's speculation that Elon Musk may sell down some of his Tesla shares to fund his purchase of Twitter. Also an element, of course, of key man risk with respect to Tesla because Elon Musk might be distracted. I'm also looking at Meta, the parent company of Facebook, of course, one of the worst performing mega caps or underperformers relative. There's not much out there in terms of the news cycle, but they're talking about adding buttons to the Facebook feed where you can give active feedback on what you do and do not want to see on your Facebook page. I'm not sure how much of folks are using Facebook anyway. And then the last one I'm looking at, Lumen, telco company, down pretty significantly in this session. Wells Fargo downgrading to equal weight from overweight. They're basically concerned about the dividend and management moving into growth mode and prioritizing cash for that.
And let's go across to where some of the real volatility was. If we go cross-asset, yes, there was intraday volatility in equities, but this is a complete mirror to what happened in the last couple of days in terms of what's happening in Forex and sovereign bonds. And ultimately, this is a day of dollar strength. This is a day where we start to talk about the Federal Reserve, not pivoting, funnily enough, with Mary Daly, of course, coming out, Raphael Bostic latest. We're looking at the euro, once again, weakening versus dollar by about 1%, British pound up by 1.4% as we have Liz Truss, once again, talking about her direction of travel for the UK economy. The loonie, Canadian dollar, also weakening versus the US dollar. Even as, of course, we therefore see Brent crude on the higher side, Canadian dollar, Norwegian krone not getting a lift from oil markets. They're actually feeding off perhaps the idea that we're going to get production cuts. So even in the face of a stronger dollar on the day, Brent crude's up 2%, WTI crude up 1.6% as 2 million barrels could be stripped from the market. And we know theoretically it's going to actually be less than that because many aren't pumping as much as had been anticipated. But we're seeing overall just the story in natural gas creeping higher as well. That inflationary pressure still there in commodities. And we see a sovereign bond pullback, particularly in Europe, 27 basis point moves to the higher side. Yields higher, bonds go lower, Spanish yields pushing up, Portuguese as well. This was a sell-off. This was once again more hawkish, maybe feeling in terms of central banks, Taylor.
Yeah, I mean, such a similar story here within the U.S. as well. Finally, after 2 straight days of some significant yields falling, yields finally rise on 2s and 10s pretty much across the curve. So you're up 5 basis points on the front end, and you go further out and you're up a decent 11 basis points when you think about the 10s, and a little bit less so further on out. But this is sort of that inflationary story. Maybe it's back in focus.
The inflationary story, and back to Ed's point too on the F-150, I was looking at that Reuters story, the idea that Ford is still citing supply chain issues. And as we sort of move forward here, Carol and Ed, into the next couple of weeks, we're going to get another CPI print next week. And a lot of people really want to see if these issues have been resolved. And there's conflicting signals out there right now.
Well, and when you look at signals in the economy, right, we increasingly hear the conversation about shifting from kind of buying of goods to buying of services, and you do wonder how that will ultimately, Ed, also ease some of those supply chain constraints.
Yeah, and I was looking at Mary Daly. She was succinct. Look at core inflation. It's heading in the wrong direction right now. July to August, we get September. What is the feed through and where's it coming from? Oil, really interesting story on that front.
And not just the core, but remember, I mean, the next report we're going to get, remember, we talk about year over year, that deceleration, month over month, though, the expectation is for another acceleration, re-acceleration.
And that's got to have been such bad news for the, well, certainly in the administration not liking what's happening with OPEC+, the fact that we are likely to still see that elevated element of inflationary pressures coming from the oil market. We have seen some improvement. The ISM data, the services data, did show some cooling thereof, and maybe we're seeing a little bit of right sizing. You talk to executives, talk to CEOs, they are saying that the supply chain headwinds are dialing back a little bit, but just not as fast as the market needs to see.
Interesting, Barry Bannister saying that the market may not be totally wrong when you think about pricing in a cut for 2023, that maybe third quarter, according to his estimates, is what he's looking at when you think about recession, mild or not, I don't know, underway.
Yeah, in the meantime, Aaron Kennan, who was on with us from Clear Harbor, he says, you know, with real rates positive by 150 basis points, you have a bit of a cushion, and you also have something that's more competitive, or maybe at least competitive to yield on what you would get when you invest in stocks. So it's just something to think about when you think about that 60-40 portfolio.
What happened to Tim today?
He's talking crypto, I think.
He's a busy man.
So he's got to be top
to have me.
Get another episode of his
crypto was dead.
Tara, there are real alternatives remain.
Oh, thank you, Ed.
You're
value add, by the way.
He'll be back tomorrow, I promise.
Ed, Ed or Tim?
Tim.
Bring Ed.
Maybe we'll add another seat and we'll just make it 6 boxes. What do you think?
Make it 8.
Little Brady Bunch kind of thing. All right, we got to run, guys. That's a wrap for Beyond the Bell, our cross-platform coverage on radio, TV, and YouTube. Yes, indeed, we will be back tomorrow to count you down. Same time, same place.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you're up to date on the markets. Right now, it's time to get update on world and national news. For that, we head over to our 99.1 newsroom in Washington, D.C., and Nancy Lyons. Nance.
Thanks, Carol. President Biden is putting politics aside as he visits Fort Myers, Florida, and surveys the damage from Hurricane Ian. With Republican Governor Ron DeSantis standing behind him, he spoke of the need for all leaders to come together to address the devastation.
Today, we have one job, and only one job, and that's to make sure the people of Florida get everything that they need to fully, thoroughly recover.
Biden says his administration will fulfill a request from Florida officials to extend the period of time the federal government will fully fund debris removal and emergency response efforts, going from 30 days to now 60. Senators keep adding amendments to the annual defense authorization bill, with the number closing now to 1,000. Bloomberg's Amy Morris in Washington helps us break down the numbers.
The amendments cover a lot of ground. One would prohibit the president from selling or exporting F-16s to Turkey. Several others tackle food insecurity among U.S. troops. And then there are the Russian amendments, mostly bipartisan, that impose secondary sanctions on foreign entities that purchase Russian oil, allow U.S. authorities to seize oligarchs' assets, and then use the proceeds to help Ukraine. It also installs anti-money laundering safeguards to keep Russians from hiding their wealth. Lawmakers plan to vote in November. In Washington, I'm Amy Morris, Bloomberg Radio.
Texas is defying the Biden administration and building almost 14 miles of new border wall. The State Facilities Commission has approved 2 contracts to build the fencing with surplus federal government materials. It'll go up in the busiest crossing in the Del Rio sector. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy Lyons, thank you so much. You are listening to Bloomberg Business Week on radio, also on YouTube. Carol Masser along with Ed Ludlow. So I can't tell you how many times we have a conversation, you probably do too, just about working from home and where it's happening, is it continuing to happening, are people coming, back into offices? But our Justin Fox, who is a Bloomberg Opinion columnist, he covers business. He's a former editorial director of Harvard Business Review. He's written for Time, Fortune, a lot of them. He's also written a book, The Myth of the Rational Market. But he's writing a column about where working from home is happening, and is it on
where it's really happening?
Right. Is it Caribbean beaches? Is it mountaintops and retreats? And not really.
The answer is no. It isn't a straightforward story.
So
but
people aren't escaping.
What he's done is
big
crunch
cities.
the numbers and basically come to the conclusion that a lot of us, obviously not you and I, we're coming into the studio every day, but they're working from home in the metropolitan city or area that they actually had lived in anyway. It's a case of waking up and your commute is your bed to your sofa, even if you're just a couple of miles from your company's office.
Right, you're not that far.
You're not that far.
From your official workplace.
I mean, look, anecdotally, my wife continues to work from home. She has an office she can go to. That's that company's policy.
And they haven't downsized or anything in terms of
no.
Yeah.
And there are companies out there that add choice. There are companies that you turned, remember, and said, hey, you all have to come back to the office.
Right.
Tech companies largely I'm talking about. And then they actually changed their mind and said, well, that didn't go well.
It is really interesting to see the change of heart and change of tune. This story has a great chart in it by Justin Fox. You can find it on the Bloomberg terminal at Bloomberg.com. Working from home is biggest in urban neighborhoods. Share of employed people 16 and older working mostly from home. This is 2021 data. So this is primary city of metropolitan area. District of Columbia, you're talking almost 57%. San Francisco, area Intermission and Castro, about 56%. Seattle, about 55%. So again, urban neighborhoods.
Urban neighborhoods, and these are cities with easy escape. So perhaps, apologies, people didn't flee.
Yeah, exactly. All right, check it out at Bloomberg.com. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. Turned out to be a losing day for the U.S. stock market. The Dow, the S&P, NASDAQ all declined. We did see a move higher really in the final hour of trading there with stocks advancing, but by the end, red on the screen. Stocks came back lower after a bounce that started around noon in New York and was attributed to a big options trade. Today, investors got fresh economic insights with data showing strong growth at U.S. service providers and companies hiring at a solid clip that could complicate the Federal Reserve's war against inflation. So here's where we ended the day. The S&P lower today, little change, down 7 points, down by about 0.2%. Dow Industrials down 42, a decline there of 0.1%. NASDAQ down 27, a drop there of 0.2%. 10-year yield today, 3.75%. The 2-year, 4.14%. Spot gold down $8 the ounce to $17.17, down 0.5. West Texas Intermediate crude bouncing after the OPEC Plus meeting, up today by 1.8%, 88.07 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much for the update. Well, we've been talking, Ed, a lot here on Business Week about alternative credentials and credentialing when it comes to the labor market. We did it recently with the head of Pearson. Today we've got another angle on it. Do you ever talk about it? Do you ever think about it?
Yeah, we talk about it a lot, partly because the skills that employers are looking for now in this moment, you know, they've been laid bare that there's this deficit in many industries. And even in the tech sector, there are lots of folks that have just said, I'm done with this. They can't bring in, you know, we don't have the coding talent in this country. Well, we had visa issues for much of the last 4 years. So I'm fascinated by it.
All right, so let's get to it. We've got a great player in the space to give us some insight. So let's bring in the president and CEO of the publicly traded company Coursera. Jeff Majankala is joining us now on the phone in Turkey. Hey, Jeff, forgive my stumbling there, but so great to have you here. And this is an area that we've been talking a lot about. Tell us a little bit about global e-learning market, the global e-learning market, and also credentialing, and what you are seeing when it comes to the demand for this.
Yeah, thank you, Carol. It's a pleasure to be here. I was in Morocco this morning. I'm in Turkey now, and you know what I'm talking about as I head around the world is the need globally for education systems to integrate the kind of learning and credentials that employers are looking for. We at Coursera, you know, we were started 10 years ago by a couple of professors from Stanford, but now we have over 100 million people from all around the world taking courses from both universities and industry leaders like IBM and Google and Facebook and Salesforce and Intuit and others. And what we're seeing is a real demand from individual learners to enroll in these professional certificates, these industry micro-credentials, but also governments are working with Coursera to integrate these types of certificates into workforce development programs, and universities are integrating these types of certificates into their college degree curriculums. And so we did a big survey to kind of ask students and employers, do these matter? You know, what are you really looking for in terms of your curriculum and the role that these industry micro-credentials could play?
Hey, Jeff, where's the skills deficit? You know, is there kind of a top 3 skills that are missing from the available workforce right now that when you speak to employers, they're screaming out and saying, why does our nation or this industry not have the available talent because they're missing specific skills?
Yeah, well, we are definitely hearing that from employers in the U.S., but here in the Middle East, in Turkey, and I was just in Africa, I often spend time in Latin America. In emerging economies, it's even more pronounced, but we are absolutely hearing employers say, we are fundamentally transforming our businesses. They're becoming more digital because consumers are looking for digital experiences, and supply chains are becoming more digital and global. And almost every job now is based on some form of data-driven decision-making and often interacts with technology. And so they're looking for a graduate and a job candidate who understands a number of things, who understands data, first and foremost. I think more than technology, it's data, because data affects every decision. And then a lot of soft skills, like can you process information and then communicate it with other people? And increasingly in global, diverse teams, in companies that are changing rapidly. So soft skills and agility together with harder skills like data and computer science are all in high demand and fairly short supply.
So Jeff, it feels like there's an uptick in credentialing and people learning as they are on the job. So for a parent of a sophomore in college who's paying thousands of dollars for a four-year degree, what are you hearing about that four-year degree and what employers really, really want?
Well, I'll tell you, in the survey, what came back was across every country that we evaluated, we went out and surveyed 2,400 students and 1,200 employers in Australia, India, France, Germany, Mexico, Turkey, the UK, and the US. And we broke out the data by response type. But the number one signal still that employers look for, more than anything else, is a college degree. So when people say, oh, college degrees are going away, at least employers are still finding that to be one of many valuable signals. But there's a lot of pressure, and I think there's a lot of opportunity to say it doesn't have to be the only way to determine whether someone's got those skills. And what we saw in the survey is that a very large percentage of employers said they'd really like to have students who have both a college degree and a professional certificate. So if you're a parent or a student in college, there's a world where you could just get a college degree and that's the only thing. But I think increasingly what employers are looking for are both a degree and a micro-credential.
Like the real online earner.
That they'd be more likely to hire someone who has a micro-credential as well as a degree.
Those online earning options. Hey, Jeff, we've got about a minute here. Just give us your big take on the world economy. What are you seeing through the tea leaves?
Well, dislocation and change, for sure. I think there's just so many factors coming out of the pandemic, and of course we're still sort of managing the pandemic, but so many factors that are changing the potential for a coming recession. Unemployment, though, is still very tight, not just in the U.S., but in Europe and many economies. As you were both saying, companies are looking for certain types of skills that they're not getting from college graduates, and universities are saying, well, how do we really change? I think that technology, and it was online learning that really was introduced to so many people during COVID, is making a big difference.
Jeff, 10 seconds, recession, no recession? How does it feel, just very quickly?
It feels like it's coming. I mean, we're working with Boise State, Hawaii, Louisiana Tech. I mean, so many schools are working with us because they're getting ready for a tougher labor market.
All right. So great to check in with you. Come back soon. Jeff Majankalda, he's the president and CEO of the publicly traded Coursera, joining us on the phone from Turkey. This is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Do you play poker? You can't nod your head on
To our
radio,
audience,
kiddo. They
I'm
don't
nodding.
know.
I'm saying no. I am not a card player.
Well, our next guest certainly did. She was a professional poker player. She's become an author and so much more, an investor. She's got a new book out talking about quit and quitting, the power of knowing when to walk away. It's going to be a great life lesson. I can feel it. All right, first up, though, let's get back to the markets and some of the top business stories. Here is Charlie.
All right, thank you very much. What happened to that rally late in the day? We had the Dow, the S&P, and NASDAQ ending up lower. Stocks declined after that bounce that started around noon in New York that was attributed to a big options trade. Investors today got fresh economic insights with data showing strong growth of U.S. service providers and companies hiring at a solid clip, which could complicate the Federal Reserve's war against inflation. Aaron Kennan is the CEO at Clear Harbor Asset Management, and he was our guest right here on Bloomberg Business Week.
They're certainly, caught between a bit of a rock and a hard place, and they know their reputation's on the line. They probably entered the game of raising rates a little too late, and they certainly do not want to be accused of pulling the ripcord on their tightening exercise too early.
S&P today fell 7 points, down 0.2%. The Dow down 42, a drop there of 0.1%. NASDAQ down 28, a drop there of 0.3%. 10-year down 29.30. 10-year yield 3.74%. Spot gold down 0.6%. 17.16 the ounce. West Texas Intermediate crude up 1.8% after the OPEC Plus announcement. 88.08 for a barrel of WTI. Tyson Foods, the biggest American meat company, is following in the footsteps of Citadel and Boeing with plans to move white-collar workers out of the Chicago area. Tyson says it's shifting all of its corporate teams to the company's longtime headquarters in Springdale, Arkansas. That means employees from downtown Chicago and its Downers Grove suburb will be relocating, as will workers in Dakota Dunes, South Dakota. Tyson shares down 1.2%. Again, recapping 10-year yield 3.74%. S&P down 0.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. Carol Master along with Ed Ludlow here in our Interactive Brokers studio. And I don't know about you, Ed, but I know growing up, my parents stressed not giving up easily, not at all. You don't walk away from things. You do not quit.
Do not quit. That was definitely my upbringing, and it's
Right?
me now. You know me.
I know. You keep
I'm
going.
headstrong. Yes.
Persevering. Well, writing about this and how learning to quit and walk away may just be a really crucial, important life lesson. So let's get to it. Former professional poker player Annie Duke is with us. She's a best-selling author of Thinking in Bets. Her latest book, Quit, The Power of Knowing When to Walk Away. She joins us via Zoom in New York City. She's also the co-founder of the Alliance for Decision Education. That's a nonprofit. She was also a partner at First Round Capital, a seed-stage venture firm targeting tech entrepreneurs. She is a very, very busy individual. Annie, so good to have you with us. How are you?
I'm good. How are you?
Doing really...
A little cloudy out, you know. Good.
I know.
Yeah.
We need the rain, but it's got to stop at some point.
Yes.
Hey, listen, it's been a couple of years since I think we talked about your previous book, but you always take your experiences as a poker player, what you've learned, and then how we can apply it kind of to our broader lives. Tell us about the progress and how it's culminated in your latest book.
Yeah, so, I think there's just a really interesting conversation to be had between poker, which is this very high stakes decision-making under uncertainty exercise, and cognitive science, which is thinking about, how do we make decisions? And I think that the two disciplines can really inform each other. So, the way I started thinking about quitting was that realizing that quitting, the option to quit, that option is so incredibly valuable in poker, because if you couldn't fold your hand, it wouldn't really be that skillful a game, right? And poker players have to really think about how to get good at cutting their losses. And actually, when you look at the difference between elite players and merely okay ones, one of the biggest differences between amateurs and experts in poker is how often they fold. When you just look at, they get their first two-card combination in a game of Texas Hold'em, amateurs will play they'll play over 50% of their hand, so they're folding less than half the time. Whereas experts are playing about 15 to 25%.
That's such a hard one to square, though, Annie. You were one of the top poker players for 20 years, right? And
Yeah.
you've written this book, and it's hard to get one's head around the strength of being able to walk away, to stop, to quit. Talk me through the psychology of that.
Yeah. So here's the thing. Whenever we make a decision, we don't have all the facts. And luck is going to influence the outcome. So I'm sure you've had that feeling, Ed, of, oh, I wish I knew then what I know now. I might have made a different choice.
On a daily basis, of course.
Right. I mean, look at what's happening with the market, right? Like you're finding out information very rapidly every single day. So this is where the option to quit becomes so valuable, because it allows us to start things even though we don't have all the facts and we know very little, because we know theoretically that when we find out new information, we can actually change our minds and we can change course. The problem for us as decision makers, though, is that that decision is itself made under uncertainty, right? So, like,
I got to call you out on that, though, because you are also a venture capitalist, and this is what fascinates me. You're a seed stage venture capitalist, right? You invest in many companies. Not all of them are going to be successful. So when you have a founder sitting in front of you, one of 100 meetings you've taken that quarter or that year, how do you say, right, I have to say no, I have to walk away from this potential opportunity?
So you have to be thinking really in a structured way about the decision. So essentially, you're taking all of your experience and you are thinking about what are the signals that I see that tell me that an investment is worthwhile. You know, given the constraints of like how much capital do you have, what do you want your portfolio construction to look like, and then you have to systematize that. So as an example, let's just say broadly, this is not nearly as complex as you would actually approach the decision. So let's simplify it. Let's say that, you know, at seed, what you really care about is what's the quality of the market, what's the quality of the product. You know, do you think it's a good product? Do you think it's going to achieve product market fit, so on and so forth? What's the quality of the founder? What's the quality of the team? You have to be systematic in making very clear and precise ratings of those things every time a founder comes in to pitch. And then you also have to be thinking ahead, right? Like you have to make forecasts that are also very precise about what's the probability it will successfully fund at Series A or Series B. And by doing that, what it allows you to do, first of all, is to overcome some bias, because it's harder to tell yourself a story or to ignore certain information that's a negative signal or ignore certain information that's a positive signal, because you're thinking about the exact same things each time. And you're creating a record that then allows you, as you see how those companies do, to go back and check on them and say, what was I thinking at the time? And like, how were my forecasts?
All right, sit tight for a second, Annie. We're going to do some news, but we're going to come back and continue the conversation. Our guest at this hour, Annie Duke, best-selling author. Her latest book, Quit: The Power of Knowing When to Walk Away. It is such a powerful lesson. She's going to come back to us. She's also partner at First Round Capital and co-founder of the Alliance for Decision Education. Right now, though, it is back to World and National News and Nancy Lyons in our D.C. newsroom. Hey, Nance.
Thanks, Carol. President Biden and Florida Governor Ron DeSantis put aside their differences and praised each other's actions as they surveyed the devastation wrought by Hurricane Ian. Bloomberg's Irv Chapman has more.
The president spoke after he and his wife surveyed the damage in a helicopter tour of the stricken Fort Myers area.
We have one job: to make sure the people in Florida get everything that they need to fully recover. Everything, this historic, titanic, and unimaginable storm just ripped it to pieces. You got to start from scratch, and it's going to take years to fully recover and rebuild.
The president spoke with local residents and authorized more federal aid for debris removal and emergency supplies. In Washington, Irv Chapman, Bloomberg Radio.
OPEC is moving to cut oil production by 2 million barrels a day. During a visit to Chile, Secretary of State Antony Blinken was asked what impact this could have on U.S. supplies.
We are working every single day to make sure, to the best of our ability, that, again, energy supply from wherever is actually meeting demand in order to ensure that energy is on the market and that prices are kept low.
Blinken says U.S. oil production is up by more than 500,000 barrels a day. The estate of the cinematographer killed on the set of Rust is reaching a settlement with actor Alec Baldwin. Helena Hutchins was shot and killed when Baldwin discharged a prop gun after he was informed it was cold. Hutchins' husband, Matthew, announced the settlement and said the wrongful death case will be dismissed. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much, Nancy Lyons. We're going to get back to Annie Duke, former pro poker player and also author of many books, including the latest one called Quit: The Power of Knowing When to Walk Away. We'll get back to her in just a moment. In the meantime, if you're wondering about the best place to drink on earth, we've got the story.
I love this story. It's not here in New York City. It's not in London, where I'm from. It's not in San Francisco. It's in Barcelona, in Spain.
Nicely done.
And it's hidden behind a pastrami shop. And by the way, the author of this, Kate Crader, I am the world's biggest fan of. She's our food editor out in London.
No, I am the world's biggest
fan.
fan.
I concede.
But
But
we can share it.
you must read. Go ahead.
No, we love Kate Crader, our food critic here at Bloomberg Business Week, at Pursuits, at Bloomberg News. Paradiso, as you said, in Barcelona. It's been named the top drinking spot by the world's 50 best bars. First time an establishment outside New York or London has won the prize. Hidden Bar's entrance is a white refrigerator door after which visitors pass a counter specializing in cured meat. Works for me.
I am a sucker for a hidden entrance, a speakeasy style, and an eclectic cocktail mix. And this sounds like somewhere I got to go. We're a little far
Looks
away.
gorgeous, doesn't it?
Beautiful,
the picture.
the photos, yeah. And also, you know, they point out that historically, New York has dominated this list.
Yeah.
Not this year.
No, but 6 Big Apple bars are included in the top 50, including Overstory, which stands on the 64th floor of an office building in the financial district. Now, there is a place, a London bar, that I think was number 2. Do you know this place?
No, I don't know.
You don't?
Sorry.
Taylor Elementary?
No, I'm not down with the kids.
What's up with you?
I've been gone a long time. What I would say, and I'm going to get scolded for 5 seconds.
What?
Beatrice Inn, R.I.P., my #1 Manhattan bar of all time. It did not survive the pandemic. Best martini in the city.
It's been so hard, the pandemic, and we know restaurants, bars around the world. Anyway, this is a great story, as you said. We are super duper fans of Kate Crader, and there's the whole list there that takes you around the globe. And if you're traveling, where are the best bars? This list has it. So check it out at Bloomberg.com or, of course, on the Bloomberg terminal.
stocks, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. The largest American barge operator, Ingram Barge, has declared a force majeure on the Mississippi River. The U.S. Army Corps of Engineers says low water levels have significantly delayed river traffic. The Mississippi is crucial to transporting grains, soy, and corn, and the situation comes in the middle of the critical U.S. harvest. Stocks came back lower after a bounce that started around noon in New York and was attributed to a big options trade. The Dow, the S&P, and NASDAQ all declined today. We did see the S&P 500 index fall by 7 points, down 0.2%, snapping that big monster two-day rally. The Dow lower by 42 points, down 0.1%. NASDAQ down 28, a drop there of 0.3%. 10-year yield 3.75%. The 2-year yield 4.13%. Spot gold down 0.5%. 17.16 the ounce, and West Texas Intermediate crude up 1.7%, 88 a barrel on WTI. Bottom line here, poker face for the U.S. stock market. The Dow, the S&P, and NASDAQ all lower. S&P down 7, reversing course down 0.2. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
You got to know when to hold 'em, know when to fold 'em, know when to walk away.
Yes, indeed. Little Kenny Rogers for you. But yes, you need to know when to fold them. And that's what we're talking about with Annie Duke, former professional poker player, longtime professional poker player, who did so well. Best-selling author of many books. Her latest one, Quit: The Power of Knowing When to Walk Away. Still with us via Zoom in New York City. We mentioned, too, she's the co-founder of the Alliance for Decision Education, a nonprofit with the mission of empowering students through decision skills education. She's also a partner at First Round Capital, a seed-stage venture firm targeting tech entrepreneurs. I was looking at your book, and you're right. We need to redefine what failed and wasted means. When we worry so much about quitting, and that quitting means that we failed, what exactly are we failing at? If you quit something that's no longer worth pursuing, that's not a failure, that's a success. Talk about, Annie, turning it upside down.
Yeah, okay, so the problem, Carol, is that we tend to think about waste as a backward-looking problem, right? So we're worried, like, if we are in a job and it doesn't work out and we have to quit and walk away, that we'll have wasted our time in it. If we buy a stock at 50 and it's trading at 40, we're loath to sell it for fear that we can't get our money back. So these have to do with like resources that we've already sunk into this, and this is part of the sunk cost fallacy. Resources that we've already sunk into something prevents us from walking away, because that's the moment that you go from failing to having failed. That's the moment you go from having a $10 loss on the books to having a realized $10 loss or a sure loss of $10. And the problem with that backward-looking perspective is that it causes you to put more time, effort, and money into something that isn't worthwhile. So the idea is like, look, if there's a stock that's trading at 40 and you wouldn't buy it today, then the fact that you bought it at 50 shouldn't matter. You shouldn't hold it, because holding is the same as buying. You should sell it. But we don't do that because we want to get our money back. And that's huge opportunity cost, because we should be taking that $40 and putting it into something that is worthwhile.
So how do you think about it when, we spend so much time, Annie, talking, and I know Ed talked a little bit about this in terms of the tech universe, entrepreneurs who create these companies that become behemoths in the tech space. Yeah. And then maybe have to pivot. And you do wonder, like, I think as you're talking, I'm thinking about Facebook, metaverse. Like, this is something that may take years to play out. It's who knows whether it'll be a really smart decision or not. But you do wonder about somebody like a Mark Zuckerberg, so identified with his company, so entrenched. Is it possible that he won't know maybe when to walk away from something that could ultimately pan out to be nothing? Did we lose Annie? Oh, we froze. I thought she was stunned by my question. We're going to hopefully get back to her. But it is interesting because I know, and we're talking with Annie Duke, best-selling author. Her new book out is Quit: The Power of Knowing When to Walk Away. And she does think about, she herself is an investor. Annie, we've got you back. Glad to. But like, how do you think about some of those tech companies that are pursuing moonshots or whatever, and knowing when to walk away from something that its time has kind of run its course?
Yeah, so I mean, look, the thing is obviously that the more uncertainty there is, the harder it is to figure out that you're supposed to quit. And more importantly, the easier it is to rationalize that you should keep going. So when there's lots of uncertainty, like, in the startup world, it's easy to say it's just around the corner. Like next quarter is when I'm going to start acquiring customers. I'm going to start accruing net new ARR that's going to show me that I'm successful. So where I go with that is Ron Conway was the founder of SV Angel. I think really has the right tactic here. And he's probably I think he might be the most successful. I think he is the most successful angel investor ever. So he's dealing with this problem of, when do you grit it out, even though things look like they're going bad, and when do you actually quit?
Right.
And he demonstrates this thing, like you've got to get people to help you with the decision, because he, as someone who has invested in company after company after company, has a better perspective than the founders who are actually in the decision. So he'll go to them and he'll say, look, I don't think things are going that well. They'll say, oh, I can turn it around, which is what they, naturally they believe. These are gritty people who are brilliant, who believe in what they're doing. And he'll agree with them. And he'll say, yeah, okay, I agree that you can turn it around. So how long? Like, how long can you keep going like this? Let's say they agree a quarter, and then they set benchmarks for the end of that quarter. So it's about being clear, because otherwise you can rationalize it away, right? So if you say clearly that we have to generate 200,000 in net new ARR in the next quarter, then if you fall short of that, you have to have a conversation about walking away, because you've agreed about what it is that shows you that you're on your path. Because otherwise you can just stay on that treadmill. I know I can turn it around, and then you have the conversation in 3 months, and you can turn it around again, and then all of a sudden you're out of money. And the problem is that if you knew it a year before, that's a year that you, as a brilliant human being, cannot be spending on another idea that might actually change the world.
So this is the kill criteria, is that correct?
Yes, that is kill criteria, is thinking in advance about what are the signals that I might see that things are going poorly. And obviously the flip side is what are the signals that I might see that things are going well. And it turns out that we're just way more rational when we're thinking ahead than when we're actually in the moment. So if we can think ahead, which is what Ron Conway is getting his founders to do, that can get us to that decision in a more rational way. And as he says, life's too short not to do that. Because if you're founders are brilliant.
Right.
They're gritty. We want them working on the best problems that they can be working on. So if they find out that the thing that they're working on isn't worthwhile, we want them switching as quickly as possible to something that is going to change the world.
It's really kind of funny in a week that we've been spending so much time talking about Elon Musk and Twitter and announcing the deal and kind of having a second. It's just kind of staggering. Hey, we have about a minute left. Was there a real life lesson that you learned where you didn't quit when you should have?
Oh my gosh, absolutely. So I think I, like most people, have stuck to things too long. And that's true whether it's, playing sports with an injury. I think that I should have quit poker earlier. I wasn't happy. And the other thing was that the game was changing in a way where players were getting way better than me. And I honestly, at that point in my career, didn't want to put in the time to keep up.
Yeah.
And so I think I took too long to get to that decision. And I think part of the reason why, and this is a really important lesson, is that when your identity is wrapped up in it, right? I was a poker player. I think it becomes very, very hard to walk away. And we need to be thinking about that in these types of decisions. Is it because, am I happy, or is it because I feel like it's kind of who I am?
Yeah, no, that's a really good point. I'm thinking about Tom Brady, Gisele Bündchen this week,
Yeah.
Sorry, okay. Listen, Annie, this has been so much fun. Good luck with the book. Come back soon. Annie Duke, former professional poker player, as we said, author. She's an investor. Her new book, Quit: The Power of Knowing When to Walk Away. It is out, so check it out. All right, folks, that's a wrap for our whole Bloomberg Business Week team. Our thanks to Ed Ludlow for joining us. I'm Carol Massar. Have a great evening.